Okay.
Sorry. Yes.
Very good. Are we good? What's up, guys? Welcome back to Zero X Research, live from the Digital Asset Summit in London. Today, I'm joined by Paul from Plasma. Paul, how are you doing?
Doing well. Thanks for having me.
Thank you for coming on. You must have had probably the busiest like 3 weeks out of anybody in this venue right now. How's it been?
I'm not sure that's true. I think there's a lot of very busy people here, but
Yeah.
no, it's been busy. I mean, leading into launch and then post launch, it's been busy.
How would you say it went? Are you happy with what you guys have accomplished so far?
Yes, I mean, I think the launch went incredibly well, and I mean, for us, kind of getting USDT flow specifically, and in particular, kind of getting the exchange to exchange or USDT flow, and really kind of starting to build like a massive stablecoin ecosystem. I think that went incredibly well, and especially on the kind of just seeing like the scale of capital that is being moved. That's been incredibly cool.
Yeah.
Well, like we have those like data dashboards, and we're averaging between 4 and 6 billion in transfer volume a day, which is incredible. And so very happy about that. I mean, market has been very volatile,
Yeah.
and that obviously is kind of the other side of that. But we have a lot of work ahead of us.
Very good. Yeah, it's a bit insane how much USDT you guys managed to attract onto the chain. Um, your original thesis was that you were going to be overthrowing Tron, or I guess like fighting against Tron. Um, but it seems like you actually took over a lot of capital from Ethereum as well. Just like, how has that experience been? Like, how do you keep all of these new DeFi users happy coming into Plasma?
Yeah, it's a complex question. I think in the end, it's more about just winning against Tron. I think like stablecoins are this incredibly kind of expanding pie, and Tron obviously has a like very good chunk of that. I do think the kind of net new dollar coming into kind of the stablecoin economy overwhelmingly doesn't choose Tron, and like our job is to make sure that like the net marginal kind of inflow chooses Plasma, and that's something we're very focused on. And on the DeFi, like you do need very deep stablecoin liquidity on the chain for that. And I mean, Plasma still has the second largest Aave instance, for example, after mainnet. And so I think we've done quite well at that, and are now kind of just in the process of like productizing all of that. But like DeFi is a means to an end, where like you don't build kind of a large DeFi ecosystem as like this is not a goal in and of itself, but I think that is kind of just a baseline that then unlocks kind of many things around it. So like I think that is like we now have this ecosystem, and then now we like, need to use it productively, basically.
That makes sense. I want to get to that productizing bit, but before that, so I think like around 3 weeks now since you guys have launched. What would you have done differently, or what would you have wished you had known before you had launched?
Sure. I mean, I think there's so many like variables in this that are like ultimately not fully within your control, right? But like Trump tweets about tariffs, and all of a sudden, kind of
Yeah.
every altcoin. I mean, Sui was down 85% intraday, and so I think like we probably would have done things differently had we known kind of the landscape
So would I.
we launch into, and so I think that's very easy to say, kind of exposed, and so I don't know. I think like overall, on like I'm knocking on wood, but chain has been incredibly stable, and we had our kind of first true stress test, obviously on Friday, with just incredible demand to send transactions and to move collateral around, and everything went flawless. Again, knocking on wood here, but that's actually been very very gratifying. I wish we didn't have this stress test quite as quickly. Like it's you never want to be in a position to have the stress test, basically. But if you have it, it's better to pass it than to not pass it.
Definitely. Definitely. And with the product, I assume that's Plasma One, right? Like that's what you guys are building the entire DeFi backend for.
Yes.
Do you want to talk a bit about what you want Plasma One to look like and how you
Sure.
want it to interact with the DeFi?
Yeah. I think really the high level thesis and conviction on our side is stablecoins are this incredibly nascent, like emerging economy, basically, and no one has kind of truly productized that economy well, in my opinion. Where you still and like we've all spent time in these places. Where you go to El Salvador and Turkey and Dubai, UAE as a massive stablecoin economy, and stablecoins are really kind of something that has emerged in the last 4 or 5 years at meaningful scale. And you can see that in a massive way, where like you have these kind of stitched together, convoluted things to actually interact with them. And I do, I mean, we talk about this on Twitter, and it's a bit of a meme. I do truly believe that the stablecoins are like money 2.0 and are basically kind of the next iteration of money. But that requires kind of productizing the usage of that money 2.0 extremely well. And that is kind of the underlying thesis to Plasma One, where I don't think anyone has really figured out a way to do that. I know it's not going to be Deutsche Bank or JP Morgan, who are very good at what they do, but like they won't win the kind of stable coin, like productizing stable coins for actual kind of end consumers. And Plasma One is our product that is built to basically how do you the value proposition of stablecoins is incredibly clear, and like I don't think I have to like do the whole like this is why stablecoins have value and are interesting. I mean, you have a very crypto native audience, right? Um, but I think that to an extent hasn't really been unlocked
Yeah.
in kind of a truly kind of distributed and well functioning way. And Plasma One is that basically productized stablecoins that are actually usable in kind of the real economy.
I think that makes sense. With Plasma One, I don't really understand how the I guess like the go to market works on your end. Specifically in terms of like banking licenses, it must be a mess to deal with. Like going to these payment providers in countries like El Salvador, Turkey, etc. How are you guys? I guess how much time are you spending building these relationships? How much time had you already spent? And what is like a realistic timeline for? I know you probably don't have an engineering work always lasts a bit longer than it should, and you never know. But how when can people expect Plasma One?
At the end of this year. I mean, we're doing a bit of a stage rollout for it. And you touch on a good point where like obviously payments is a like highly jurisdiction specific and complex business to build. For us, it's always been clear that like Plasma One is basically the kind of poster child distribution wedge customer of like this is what kind of the new economy of payment systems looks like. And so for us, that means we're very focused on kind of doing it in the proper way. Like
Yeah.
it's very like you can go out and just like work with someone who just does the entire kind of payments backend. Um, and that is not the approach we're taking. We're very kind of aggressively both acquiring regulated entities that allow us to onboard users directly there, building out a compliance function in the Netherlands now, and kind of getting the licenses in the kind of appropriate jurisdictions. And it's interesting because like, some of those businesses are like standalone, not actually all that interesting, but as a kind of puzzle piece in the larger puzzle that is like Plasma and Plasma One, they have incredible kind of strategic value for us. And then so for us, it's been about how do we kind of verticalize as aggressively as we can and as quickly as we can into kind of owning this entire like stablecoin
Yeah.
payment vertical basically. And there's a lot of things we're working on that. And I'm genuinely excited for Plasma One as a consumer. Like
Yeah.
I'm going to be the biggest kind of fan of using the product. I think the entire team is looking forward to using it too. And I think it's very gratifying to work on something that's very real. Like it's very like it's you can touch it. Like
Yeah.
it's very fun to build.
No, I can imagine. I'm also very excited for it. I signed up for the wait list. Um, One thing I've been thinking about is to me, Plasma One seems more like a crypto native product. And I guess your integration with centralized exchanges is more of like a emerging markets product. Do you think this like viewpoint makes sense?
I think to an extent, stablecoin payments are a crypto native phenomenon right now. I think if you have like a very honest look of like where does stablecoin flow actually happen now? It is overwhelmingly just dominated by centralized exchanges, right? And actually, interestingly, I mean, obviously, the big ones are incredibly dominant,
Yeah.
the Binances and OKXs and Bybits, and we have the pleasure of working with all of them. But you then also have a like very very wide network of local players in that. But like today we partnered with BitCup, and they have extremely high market share in Thailand,
Yeah.
and most of the kind of stablecoin crypto economy in Thailand is kind of routed through BitCup. And so for us, it's very much about like how do we go to like the key jurisdictions and partner with the kind of largest and most relevant players to kind of truly distribute kind of the plasma USDT rails everywhere, and also kind of have direct access to users.
I think that makes sense. I wanted to bring it back to the DeFi side for 1 second. So you guys mainly the stablecoins on Plasma are USDT. We see some USDE. How many more stablecoins do you expect to onboard onto Plasma? What is the, because you guys are not shy about being very pro Tether, but from what I remember, you were also saying this is for everybody. We just want as
100%.
many stablecoins as possible.
Yeah, I mean, I think we have 13 or 14 different stablecoins on the chain right now. I'm a strong believer in a kind of multi stablecoin world, and I mean it's very top heavy, obviously, right? But like, as long as like as soon as you drop out of the like top 4 or 5, they become quite
Yeah.
small, actually, which makes a ton of sense, right? Because like liquidity begets liquidity, and a larger, more liquid stablecoin is a better product as a function of being
Yeah.
larger, basically. And so I do think stablecoins are going to stay quite top heavy, and USDT I think is kind of a very logical place to be focused, given how much of the kind of global kind of non-US payment flow they kind of truly command. I don't think that changes, but I think for us, like we do have like we work with a lot
Yeah.
of different stablecoins, and we're keen to work with anyone.
Perfect. One thing I've been thinking about is USD is the most dominant stablecoin, like the dollar stablecoins. How is are you guys looking to onboard like euro, the pound, lira? Is this something that you're actively working towards, especially with Plasma One? I assume there is going to be like conversion
100%.
in app.
Yeah. I think actually Lira is a really interesting one. I mean, we work very closely with B Lira, which is a kind of exchange and stablecoin issuer in Turkey.
Yeah.
And they have a TRY stablecoin that we now have on Plasma too. I think it matters a lot for the kind of both first and last mile, especially on the payment side of things, where people that want to use stablecoins but have local currency need some way to obviously get into like on the both on ramp and off ramp. I think like local currency stablecoins play a massive role. I do think that USD dominance probably goes down, because I mean it's 99% right now. I was talking to Rob Haddock actually yesterday on the panel, and I'm quoting him here. 68% of all kind of global trade is settled in USD, and so I do think that stablecoins are still going to have a higher share of USD denomination, just given because so much of the value proposition of stablecoins is just access to USD.
Yeah.
And like you like if you are in an economy that has unpredictable central banking and high inflation, the reason to like use USD stablecoins is like you want access to USD, and that's the most liquid and easiest way to do that. And so I do think USD stablecoins stay extremely dominant.
That makes sense. In terms of DeFi, a large portion of Plasma is lending and vaults, which seem natural given that it's a stablecoin ecosystem. Is there any? Are you guys planning on onboarding more DEXs, more perps platforms? What is the, I guess, like developing the DeFi side of Plasma look like?
Sure. I mean, we've been unusually opinionated on that, I think, as a chain, and that's a choice I'm personally happy with. I mean, I would much rather work with Aave than with Compound Fork, and
Makes sense.
because like they're just more capable and very good, and they like can do this at scale. And so you like I feel much better having money in Aave than having
Yeah,
money in
me too.
like some like L2 ecosystems forked whatever lending protocol. And so I think that choice has made a lot of sense, and we will kind of continue doubling down on that, obviously. I think for us, like step one was getting the basics right, where especially in kind of this kind of larger, kind of complex system of kind of having a stable economy, a stablecoin economy. I think lending is a very very central part of that, just for capital efficiency reasons
Yeah,
and for yield generation. You have demand for borrow, and so for us, really the initial goal has been how do we bootstrap that system very very quickly, but then also how do we like basically make the demand for that organic over time, right? Well, like we we incentivize pretty heavily. We're now tapering that pretty aggressively, just because we like needed that kickstart to kind of really have capital
yeah,
move, and like there is no like the delta for us right now in having 10 billion versus 15 billion in the Aave instance is pretty marginal, and so it's also about kind of being thoughtful on how do you design incentives
yeah,
basically that you can then very quickly transition into like how do we you want to incentivize as little as needed basically,
yeah,
but you still want to incentivize sufficiently to kind of really achieve the goal you set out to achieve. And so when you mentioned meeting River,
yeah.
who's fantastic and incredibly sharp, and we've had very very long discussions on kind of the complexities in managing that.
Yeah, I can imagine. Incentives are very, very difficult, especially because you're trying to move stable coins, which wants to stay where it's put. It wants to be as
Yes,
safe as possible, to a new chain. Um, but I think Aave probably helped with that as well because people can trust Aave. They can trust.
100%.
Yeah,
I feel much better having my money in Aave than having it elsewhere.
yeah. Um, one more thing that I know you guys are working on is PBTC. Do you want to kind of talk a bit about why you guys want to launch your own native version of Bitcoin for your chain?
Sure. I do think there's incredible demand to save in Bitcoin but spend in USD denominated assets. And wrap Bitcoin is flawed for like a very long list of reasons. I don't think I'm like this is obviously a very biased view of this. I do think that is pretty widely shared,
Yeah.
and I don't think anyone has truly kind of built a fantastic version of a like native Bitcoin that is on a
Yeah.
on an EVM chain, and that is kind of highly composable and can be kind of used productively. I think that is a massive unlock for us, and so that is something we're kind of building right now, just to kind of figure out how do we. I think also from a kind of savings and payments angle, there is just demand
Yeah.
to save in Bitcoin, right? And but I don't think anyone wants to spend in Bitcoin.
No,
Really,
definitely
I mean,
not.
just looking at the data,
Yeah.
that seems like very very evident, that like there's zero demand for people to truly kind of spend Bitcoin at scale. They want to spend USD, and so it's about like how do you marry those two realities.
And that'll be Plasma One, I assume you're gonna.
But like Plasma One is going to be a component of that. Yes.
Um, one more thing is the USDT free transfers. I remember last time we chatted, you said it is a very complex thing to solve. How are you guys approaching it now? When will it go live?
It is actually live.
Okay, very good.
It's we have it on a dashboard, and we now I mean, we have a bunch of payment partners we're integrating into that. It's actually worked extremely well. I mean, it's really hidden away right now. We've done 150 million
Wow.
in transfers on it now. That order of my I haven't checked in a couple of days. But that kind of scale, and especially on the payment partner side of things, where you do have a lot of those entities that just facilitates so much payment flow, and we're onboarding a bunch of them onto kind of that product feature now, and that has been that's been a very easy sell, actually to them,
Yeah.
which is great to see.
How do you think about? Because to me, Plasma seems kind of like a two-pronged chain. Like you have stablecoin DeFi, and then stablecoin transfers. How do you think about balancing those two? Like, is there something that do you have separate teams working on separate sides, or is it like your main goal is to just combine these two eventually?
I think it's two subcategories of like the same thing, right? But it's like, how do you build the kind of largest network for stablecoins? And I think that like just needs to involve both, right? Where you need sticky capital on one side, and then you do want velocity
Yep.
at the same time as well. And so um, those are not separate teams. I think this is like one kind of like in the end, those two obviously do impact each other, and so you can't really view them in isolation. And so I do think those are highly connected, and then I kind of one and the same goal, which is uh, just building a stablecoin economy.
Yeah, I think that makes sense. Last question. Going forward, let's look over the next 6 to 12 months. First thing is for Plasma, what should everybody expect? What are you most excited about on your personal, as well as like what should people look forward to? Second thing is whole conference is basically about tokenization and stablecoins. What have you realized, or like what is your hot take or big prediction over the next year about like tokenization, stablecoins? What do you think does very well? What do you think doesn't do very well?
Yeah. I think I have many hot takes, some of which are probably not in my interest to publicly state. But in terms of like what to look forward to, I think we do have a lot to prove. I think we're in a very good spot where we do have a lot of the kind of USDT flow, and specifically kind of the net new flow, because we do see a lot of that kind of just happening on Plasma now. We will continue pushing that extremely aggressively. I do think that there is like the Plasma One rollout, and that is deeply exciting to me, and I think that's going to be a fantastic product, and we have a lot of. When you mentioned that, like we've been very busy the last couple of weeks, I don't plan on taking vacation.
Very good. Very good. Hot take prediction
Hot take.
doesn't have to
I
be
think
too hot.
basically no one understands stablecoins. Even
Okay,
a lot of people who talk about stablecoins
that is a
as a
hot take.
living. I think people like stablecoins isn't one product. I think stablecoins are probably four somewhat separate products. Really, and I think people don't like. I think that is an underappreciated fact. Where people always kind of lump a lot of things that are wildly different into one category. Because they like generally trade at $1, and I think that is not discussed enough.
Okay, very good. Paul, thank you so much for coming on. This was a pleasure.
Appreciate it. Thank you so
Perfect.
much.
Um, guys, we're gonna take a 5 minute break and then we will be back on. Can we We're rolling. What's up, guys? Oh,
Ah, okay.
should we give the thumbs up? We're good? Hey, guys, we're back. Today I'm joined, well, now I'm joined by Carolina from the Blockworks advisory team.
Hey, hey.
Carolina, how are you doing?
All good. How are you?
Good. You gave, I'm not going to make you do the whole presentation, but
Thank you.
you gave a hyperliquid bull case to a lot of asset managers yesterday. Um, First of all, let's do it with this. How do you see hyperliquid play out going from here? Not price action wise, but we've had a lot of things come live.
Mhm.
So HIP free is live already. I feel like that was the last big one. Where do you see the chain go from here?
Well, I think definitely that is the big thing happening right now. And we just need to see what is coming through HIP3. So I remember on testnet, we could see like a lot of exciting things, a lot of like commodities, stocks, FX options, a lot of things. So really going into global derivatives market, which is like so much bigger than crypto
Yeah.
assets market. And so that's where we're going. I'm excited to see.
And when you were doing the presentation, did you end up building out a bull case, bear case?
Like with numbers? No, I thought you did that.
I did do that, but my one is illegal. I'm not allowed to share it. In terms of, I guess we're saying like we want to onboard more and more FX. How do you see that play out? You know a lot more about risk than well, I know nothing about risk, but you know a lot more about risk than anybody else. How do you we had a lot of like liquidations on Friday, let's say. Do you think that's going to be like going forward? Hyperliquid handled it relatively well, but do you see that like changing going forward? What does the team need to do? They had jelly. I don't know if you looked deeply into that, but yeah, like any comments on, I guess, the auto deleveraging feature as well as like how they need to handle for billions to come on board or I guess trillions to come on board.
Well, I feel like it has been like risk has been growing alongside the product, and it like Hyperliquid has responded really well to like everything that's happened, and it's just growth pains. I feel like it's something that we know it's going to happen, and Binance, for example, did much worse than Hyperliquid when you consider just like it stopped and Hyperliquid didn't.
Yeah.
And it is a much bigger exchange handling much bigger volumes. And so I think the structure is there to handle the money that's coming. And the auto deleveraging, for example, I think worked pretty well. Of course, it's not ideal. No one really wants their positions to be closed. But the point is, it's robust, the platform works, and that's what you want at the end of the day. And liquidations also, like everything is transparent with Hyperliquid. Obviously, Binance had much more liquidations
Yeah.
than it's actually out there. So yeah, I think it's risk is growing alongside it. It's going well.
Not a lot of people know this, but originally the Hyperliquid bull for the team was you. I guess before you, it was an unspoken of third party who onboarded you onto the platform as well. How has, I guess, like your thesis worked out from November 23? Is that it? No, November 24. When was this?
It was when I first joined. It was April 2024. So
Okay.
it was my like take home assignment during the hiring process for the research analyst position, and it was then like my first research piece. I think at the time it was the alpha phase maybe closing, or no, one of the
It was early.
phases. Yeah, one of the phases was like about to close, and yeah, it was still many months out from TGE. And honestly, at the time, it was a bit more of a risky thesis. Like, is it really going to be like the next big thing? Because I remember there was not really anywhere that you could trade on chain like perpetuals. People were trading in Binance, Bybit, and really kind of they were against it, but they had to
Yeah.
because you really couldn't do it anywhere else. You had DYDX, and I remember at the time was like, okay, but is it going to be able to eat into DYDX's market share? And now you don't even like think about
I
it
don't know.
anymore.
No. Why do you think they ended up doing so well?
Well, I think yeah,
My thesis is the listings. I just wanted to throw it out there. My thesis is like they list
the speed.
anything they can
Yeah.
as quickly. Like they want to just onboard as much retail as possible
Yeah.
at all times. Just like come, you can click connect and trade whatever asset day of.
Yeah, I think in the beginning it was also like the points meta was starting and people were like, okay, I guess I'm gonna trade here. But then I feel like people were usually impressed with like, oh, this is actually like doable. I don't need to just be farming this
Yeah.
for the airdrop. And people really like just stayed after the points ended also. And TGE also, doing so well, being kind of the first project in crypto to not give it all back to VCs, to like not spend on liquidity mining incentives. It was really refreshing. People really started trusting, and whenever like something a bit wrong happened, I feel like the way that they dealt with it was, always building more and more trust.
Yeah.
And so I think that's what worked.
Are you a user of the Hyper EVM?
Yeah, I used Felix. Not like
My
not
question
many broad products, but yeah.
My question is going to be: do you think Hyperliquid, I guess Hypercore needs the Hyper EVM, or do you view it as like it's a fine extra to have? I'm not sure if it's completely necessary.
Um, I think it's definitely a nice extra to have, and I think it's necessary if we want it to be like something else that's not just like an exchange. And I think if we wanted to also compete with other exchanges that keep coming, lighter, Aster, or there are many exchanges that will keep coming on, and I think it has like having this dual system and having more products with like an ecosystem lock in. I think that will make it really different, and so it will. I think the importance of the hyper EVM will grow.
I think that makes sense. You mentioned Lighter and Aster. Have you used either of those protocols?
Yes.
Do you think that either of them pose a very, very significant threat to Hyperliquid?
Um,
We can speak freely. The podcast is
we
good.
can speak freely.
Yeah, we can speak freely.
Well, they just don't work as well, and of course, it's the beginning stages, so it's fair that they don't work as well. But I think like the security that Hyperliquid has, like the battle tests that they have encountered until now, it's I think the competitive modes that Hyperliquid has right now is going to be really difficult for newcomers to compete with. And from a trading experience, no,
Okay.
they
That's fine.
not
What's
really.
your bear case for Hyperliquid?
Um, I guess maybe like competition from other chains that are new, shiny, Meggies, Monad. I know that there are also good projects being launched there. Um, I'm I'm a Hyperliquid bull. I don't have like a very established bear case.
Very good.
But yeah, how do you see it? What's the bear case for you?
I think the bear case is that Hyperliquid does what Ethereum did, and they get a little lazy, and they let like Ethereum to me feels like they got attached to one narrative,
Mhm.
and they said, well, we can just coast off this for like the rest of our lives. Like it's deflationary, and then at some point it stopped being deflationary,
Mhm.
and then they went into DATs and whatnot, whatever. But like Solana was very clearly like coming to dominate, and Ethereum almost like didn't care until it was too late.
It was too
That's
cool
my
to care. Yeah.
yeah, that's my bear case for Hyperliquid. Is I don't think to me they seem quite competitive, and like they wouldn't let that happen. But you never know, right?
Yeah.
Like,
Yeah, I guess the other like critique I've been hearing is people are worried about like fee competition.
yeah,
As more competitors come on, will all fees be driven to zero, and then eventually like buybacks don't matter anymore, and things like that. But what I think about that is with HIP3 and with like builder codes, basically with Hyperliquid being integrated in like a million other things that are not Hyperliquid, I think the reach expands like so much that people will be using Hyperliquid without even knowing
yeah.
that they are. And so I think like, it will be very difficult to compete in fees in that sense.
I think that makes sense. And like historically, we've always been told like, oh, you want to control as much of the front end as possible.
Mhm.
Versus like Hyperliquid is very clearly trying to become the back end for
Yeah.
Phantom, MetaMask, Rabby. Trade is like units one where you can
Mhm.
long and short Nasdaq. It's gonna be interesting to see. So no bear case, very good. I guess last question here is before we end it off. What apart from Hyperliquid, are you looking forward to over the next year?
Um, I'm not really sure right now. I'm looking forward to the new chains that are launching. I'm mostly like curious
Okay.
to see how they will do. But not super bullish on anything else in
No?
particular.
Apart from Hyperliquid.
What about you?
Um, HIP free was the last thing that I was like really, really excited
Mhm.
about. I'm looking forward to this like stablecoin thing that they're going to be doing on Hyperliquid, like USDH native markets. That um, I'm curious to see how that's going to turn out. Like they've already launched some pairs. It's not doing particularly, but it's very new. It's a new stablecoin and
Mhm.
stuff. So I'm looking forward to all of that. I'm kind of interested in what Ethena is going to be doing. We're gonna get to talk
Yeah.
to Guy today, but uh, excited about them. It seems like they're completely changing the way that they like
Yeah, it's true.
the structured product.
The white label, yeah.
Now it's like a white labeled stablecoin. Plasma is a big one. Although I've been hurt by Plasma, I don't want to say this in front of Paul. I'm glad I love
He's
Paul,
out.
but I long the top Paul. But I'm excited for Plasma One. I'm excited for like what they're building over there. I think it's cool. I think stablecoins are.
Yeah, stablecoins definitely,
Yeah.
definitely are interesting.
Okay. Carolina, before we end things off, do you want to give one thing? Your Twitter and what you guys do at Blockworks Advisory as a final shill, and then we can end it. No, you don't want to do
Okay,
this
no,
one.
that's fair. Should I look into that? No, why did you
Middle
point?
camera.
Okay. So I'm Carolina. I'm a lead analyst at Blockworks Advisory. And Blockworks Advisory is essentially a team that's spun out of Blockworks Research. And what we do is use all of our data, all of our knowledge to, instead of only cater that towards capital allocators, to actually help protocols. And we're working with a lot of big names. We're working in protocol relations, that's like a big focus of ours, and also risk services. So we are on the risk committee for Ethena, also for Spark, the Risk Council. So there's a lot of exciting things that we're doing. Check it out. Yeah, my Twitter is Carolina.
Very good. That's not your Twitter, but it's okay. We'll get over that one. Thank you, Carolina, for coming on. This was great.
Thank you.
Are we good? Can I put my How should I introduce you guys? What would you like your titles to be? What are your titles? Not what would you like it to be.
Oh, we're both partners.
Okay.
That way, yeah.
Alright, so if you want to address the camera, address the middle camera, okay?
Are we good? Hey guys, what's up? Welcome back to Xerox Research. I am joined by Samantha and Adam from Rockaway. How are you guys doing?
We're very good.
Very good. How have you been enjoying the conference so far? Did you both have talks? I know you had a talk yesterday, a moderation, intense one.
Yeah, it was an intense debate.
Yeah.
I enjoyed it. I was lucky to listen to it.
Very good.
I have tomorrow, so let's see
okay.
how it goes.
Very good.
So this is his warm up.
Very good. Adam, I'm going to start with you. This Friday, we had pretty intense liquidations, a lot of market volatility. What is, I guess, like your take on it? What do you think happened? How do you see it play out going forward?
I mean, there are many speculations on Twitter, right? What happened? It's funny. I think many of those was really wrong. Like I have seen some speculation that somebody dumped USD on Binance, but if you look at the timeline, it actually happened after, so it wasn't happened before. So I don't think it was like some organized attack, really. The problem was, of course, auto deleveraging. Everybody today it's expert on auto deleveraging. I think on Thursday nobody even knew that this exists, so it's kind of funny. But the truth is that most of the market neutral funds they really stayed naked, right? Because when you're market neutral, as we are, you're hedging basically by shorting perpetuals. And the problem is when the exchange basically close your hedge, you're kind of running naked on the long position. But the truth is that it actually happens only in really extreme scenarios when there is no any more liquidity in the order book. So actually you get closed at very long point. So most I think market neutral funds actually benefited because when the market bounced back, they were able to hedge above their exits. So I don't know many market neutral funds, and I talk here to many of those who actually had some significant losses related to auto deleverage.
I also think though, like maybe to chime in there, I don't think it was an organized attack, but I think it exposed that when you look at it, you're like, it could have been an attack vector.
Yeah.
So kind of, that peg based on the order book and kind of some of those Oracle issues that were exposed make you sort of breathe a sigh of, wow, we're almost lucky it wasn't a deliberate attack because it exposed a lot of flaws.
One thing people have been chatting about is like sexes versus dexes and how they've handled it. Do you guys have a take on either of those?
Sure, I think DEXs handled it really well. I mean, the really decentralized DEXs, they also have auto deleverage, so many people also got liquidated on hyperliquid as well. What I would more highlight is that there are many lending protocols which handled the liquidations really well. So we haven't seen really a lot of bad debt across DeFi, which I think is really unbelievable given how the conditions were bad. I actually expected some, but it worked really well. DeFi worked really much better than CeFi in this case, especially for lending protocols.
Very good.
I'm chipping in as moderator in this case. Have any of you kind of heard of, I guess, across private credit? I mean, obviously we're involved with Pareto. I know you've connected with them. We don't right now. We're not active on Maple, but yeah, I think those are where I would want to look in this moment, right? Where there's more vulnerability.
Yeah, I mean, we reach out basically to all our borrowers because we have also centralized borrowers, and it seems like they all handle the situation pretty well. It's also true that they all have like really robust balance sheets, so even if something would happen, they're able to cover it from their own equity. But I think we will see still corpses coming out, maybe this week and next week. Of course, nobody is going to tell you I have a huge hole in my balance sheet. But
you walk around here and everyone says, it's the craziest thing. It's our best day ever. And I thought, oh my, everyone had the best day ever. Like, it's so good.
And then there's $20 billion in liquidations, right?
Yeah.
So you're like, okay, it doesn't
One guy
sum
had
up.
a really bad day, but everyone else had an amazing.
Yeah. I wonder when we'll start seeing. I mean, you said this week, next week, maybe. After FTX, it like almost surfaced once or twice a month for like 3 months. Samantha, with regards to venture investments, how are you guys thinking about it right now?
Yeah, so sometimes I think my job is kind of easier as a venture investor because we have a very narrow focus. And I've had past venture gigs where it was sort of, we look at everything. It just, founders compelling, ideas good, target market. it kind of overwhelmed me. So I like that at Rockaway we have a pretty simple prompt, and for DeFi it's like, would we put money in the product today, right? These we're funding things that are protocols that are usually on-chain yield sources. It's very intuitive. Like, do we want to be the liquidity provider? Do we think it complements a portfolio on chain? Does it have a different risk return profile? Maybe some kind of superior investing experience. If it doesn't meet those and we wouldn't kind of be a first time user or customer, it's a kind of then it's a not hell yes equals a no. So that's one side of the house. And then the other, we were seed investors in Solana. We, especially on Friday, we still have a lot of confidence in that platform to underlie a lot of what we see of like finance coming on chain, the performance, the kind of commercial attitudes, just the founder community that's there today and the caliber it attracts. So that's a lot of our book is like Solana and where we see the gaps in that on-chain finance sphere in Solana, and then DeFi protocols that we want to bootstrap liquidity and participate in.
And would you say that the landscape has changed significantly over the past year and a half? In terms of like, I imagine post FTX Solana investments were very different than what you guys are getting pitched now, right?
Valuations are higher.
Yeah. Now you get an expensive deck. They almost want you pay now to open the deck. Actually, you send a transaction on Solana. No, I think part of why we've liked Solana isn't as much this dogmatic or like evangelical.
Yeah.
Like this is it. That's on me. I don't think that's the firm. We lend to projects that are in a lot of different ecosystems. With Solana, it's really the ability to pivot and be opportunistic. And I said kind of the commercial chops. So the kind of how we've seen it change is it kind of moves where the puck hopefully is going, but definitely has gone,
Okay.
right? And so like right now the puck is kind of on-chain trading use cases, these kind of new perp dexes, CLOBs, a bit of, kind of stuff for trading infrastructure and new structured products on chain. And we see a lot of that on Solana that's being funded right now.
Perfect.
I mean, if I can add, I just think that Solana was one of the first layer one which understood that it's not all about technology, even though their tech is great, but they're really good on the BD side.
Yeah.
We have seen many layers one which basically have no BD even until today.
Yeah.
Or their BD really sucks, and I think Solana was really good early on. With their conferences, with hacker houses. We supported many of those. So I think
200 hacker houses.
Uh,
So I think that's quite important part of Solana, which people usually don't see.
Yeah.
They only highlight the tech, but I think actually Solana is pretty strong on the BD side as well.
Very good. Last question. Do you guys have a prediction or a hot take for the next 6 to 12 months? Like something that you think will upset people?
I'm actually curious, like how the market will develop after Friday, because if you have seen $20 billion in liquidation, and basically there wasn't any hedge fund which is leverage long, like which wouldn't be liquidated. I cannot imagine, because like all the altcoins and token, they went down 70%. So even if you had only 2x leverage, you got liquidated, right?
Yeah.
There wasn't time to react, especially if you had your hedges, for example, on Binance. The API didn't work, so you got liquidated. So if use case for crypto, it's kind of trading, then I'm like wondering who will be trading now. Like if this speculative capital is not already wiped out from the market. So I'll be definitely watching volumes in upcoming weeks. I'll be watching leverage in the system if people are getting leverage again. And so I think this will be very, very important to watch going forward.
I don't have one great singer, so I have like two fleeting ones. One, I think a lot of venture funds from 2020, 2021 are now looking at 5 years in and sitting on a bunch of dogs. I think it's under talked about how many are never going to raise another fund and already know, so I think there's going to be a bit of like begging on hands and knees for some other guy to mark you up so you can get a job somewhere else because your dogs ain't going to pay. So I think that is something there. Like a lot of these are fund in name only, but not active and not raising. Yeah. And then I think the privacy thing, it ain't a thing.
No?
I don't think. No, people being like, it's a privacy moment. I like invest in a lot of privacy things. I think it's such a hard sale. I think that's why I don't think it's a moment. because I know the sale is really hard and there's nothing that's changed about the sale, which is if you're not saying I'm going to make you money, or save you time, it's really hard.
Yeah.
None of that has shifted. So I think it's like an engineered or something thing, but fleeting.
That's a good point. No one cares about privacy, unfortunately, to that point.
It's a really hard sale. I think maybe there is a wave of like maybe dark pool stuff. So we invested in one on Hyperliquid, but that's not really privacy. It's protect your alpha thing, and it's kind of a feature for trades, maybe. But just privacy generally, no. I think it's hard.
I think that makes sense. Guys, thank you so much for coming on. This was really, really
Thank you
fun.
for
Thank you.
having us.
Very good. Was it Silhouette?
Hello? Does that sound good?
Testing.
It's too
How we
close.
sounding? All right. Like this close?
No, it's too close.
Right around
too
here.
I like this. Yeah.
All right.
Are we?
All right. Very
Real casual.
What's up, guys? Welcome back to 0x Research. I am joined by Westy Capital from Blockworks Research and Teddy Oosterban from Kairos Research. Did I say that correctly?
Osterbahn.
Very good. Thank you
Yeah,
very much.
close enough.
How are you guys doing?
Doing pretty good.
Doing good?
Yeah. Das
Yeah.
has been great.
Das has been
Having a
good.
good time.
Very good.
I'm doing well. London's been awesome too. It's my first time here. Can't believe you guys had me on the podcast in person.
Yeah, I'm very excited.
Honored.
One fun fact is that Teddy hasn't been able to fit into any form of public transportation. Yes?
Only the tube. Everything else has been fine. There's only like one the Jubilee line, I think, is not built for me.
No?
But everything else has been pretty nice.
Okay, very good. Did you do any speeches, any talks?
No, I'm talk free.
No? Very
This
lucky.
week.
No, I'm not that I don't love doing the talks, but
No, I'd love to do one. Yeah.
Teddy, how's it been for you?
I'd say it's been great. I mean, again, this is my first thing that anyone's asked me to do, but
Hopefully not the last. We'll see.
Blockworks has never paid me, but this has been the best conference I've been to. So that's a sincere statement. I feel like
slip in the 20 now.
Yeah, very good.
every panel I've been to has been interesting and like captivating. So
Yeah, that's what we go for. Huge shout out to Bennett, who does all of these things, as well as everybody else, but Bennett mostly. We had a very stressful weekend. Were you flying while everything happened?
No, I flew in on Sunday.
Okay.
I was AFK though on Friday.
Okay. What were you doing?
I was just logging off.
Oh, very good.
Just enjoying life, away from crypto. And I didn't have any levered positions open. Simplified book, and all of a sudden I got messages on Saturday. I'm like, no way that those prices are real. But yeah.
Teddy, any pain?
a little bit of pain, but it will be okay. It seems to happen every time I go to a conference too. It's been like once a year for the past 4 years. Like I'm supposed to get on a flight and I get liquidated. So get liquidated once a year, and it's always right before flying. So then I get a few hours with no Wi-Fi just to think about my actions.
Just focus out.
Yeah.
No, Friday was pretty insane. I mean, like you were flying. We have a guy, Luke, on the research team, and he was out hunting like all week.
What was he hunting?
Bull elk is
Okay.
what he said. I don't know what it is. Some
Yeah.
American thing. And I think he came back on Monday and he was like, "Well, like, did Adam go to 0.01?" And we're like, "Yeah, it did, buddy. Like, best of luck going forward." Like, it's crazy. Everything dumped.
It's insane.
How
are you doing?
I'm good. I can't do perps. I have a very addictive personality, so I try to stay away from whatever I can get addicted to.
So you're more of like you're a hype holder, but not
Yeah,
a
yeah.
user. Not like
No,
a
I
power
use
user?
it to buy more hype on spot,
Yeah.
less so on perps. I generally can't do perps. Like, actually, other people can generate the feeds for Hyperliquid. I just want to benefit off of the feeds by my
Fair
token.
enough.
They made $20 million. That's a significant amount of money for one day. I mean, if you annualize that, we should we annualize it?
I mean, but how much of that came from traders?
Yeah.
And
How do you think
especially
that?
HLP Vault just
Yeah.
milking traders?
Well, it's
What do
not
you
really
think about that?
milking, is it? Like,
Uh,
if other traders can't take on the position, it goes to the HLP. I'm doing auto deleveraging talk on camera. That's not a good thing, but we're gonna take a risk.
yeah.
So, if the order book doesn't work out, it goes to HLP. If HLP can't cover everything, then auto deleveraging. That's fair, no?
sounds
think-
pretty fair.
Yeah, I think it's fair and it's the state of the market, but I don't think it's a good thing for Hyperliquid.
No, definitely
Like-
not a good thing.
Like even the amount of money they made that day, it's like, okay, how much have they not made since that event because that happened? Like,
yeah.
it just feels weird that prices go down to a point where they're not going to stay for more than 5 minutes, so they probably shouldn't go down there in like a healthy market. I
But
say as I'm coping from. But yeah, it just seems like it's not a great event in order to keep perps trading sustainable.
Yeah, I mean, I'm just regurgitating what I saw on
Yeah.
X after the fact. People comparing, HLP to lighter,
Yeah.
and there's been, I guess, some talk on the sort of trade-off between traders winning and losing ADL and the benefit of this like backstop liquidity providing.
Yeah. I mean, you never want the protocol to accrue bad debt, right?
Yeah.
Like, that to me is very basic. So if the HLP is designed such that the protocol can never accrue bad debt, to me that doesn't seem like a bad thing. Like, no one would be like, "Oh no, Aave."
It's a trade-off.
Yeah.
It's like, but if you're
But it
prioritizing the
hurts.
protocol, you might hurt the traders or get less traders because they don't feel as comfortable.
Yeah, that makes sense. It definitely hurts because Teddy was like, "Oh, I got liquidated," and I was like, "Oh wow, Hyperliquid made $20 million. This is fantastic." And it's-
Yeah, but yeah, I think it's much better than things would have been 3 years ago or
Yeah.
4 years ago. So it's definitely trending the right direction. And nothing broke.
I like that we say this every time something bad happens. We're like, oh, like 3 years ago, everything would have gone to zero. Now we're doing okay. DeFi, it just works,
Yeah. I think there's some truth behind that.
No,
I
I
don't think that
definitely
means
agree.
we should quit and not do anything from now on. But I think that there are massive improvements, and like I'd still like to use. I mean, Hyperliquid fared better than Binance did.
Yeah.
And that speaks to like there's a lot.
I mean,
of
they shut
trade-offs.
down Binance, which is
Yeah.
insane. Like, it's the largest exchange in the world, and you couldn't get orders for it, apparently. I just talked to Adam from Rockaway X, and he mentioned that they were like, surely a lot of people got liquidated just because they had like naked longs left, because a lot of them hedged through Binance, and Binance API just was down completely. That's a ridiculous thing to have as Binance. Like, can you imagine?
It definitely felt like your like CFI front ends didn't hold up very well. Like a lot of the stuff that people use that like are run by centralized companies, but DeFi held up just fine as a whole. That's what it feels like to me, at least.
Okay, let's move away from the very depressing topics and say, what are you guys looking forward to over the next 6 months?
Monad cards being worth 100K. No,
I think they got announced. It's worth minimum 100K.
really.
No.
I
You
think
can retire if you got a Monad card.
I don't know. Nothing really comes to mind. Yeah, I guess Monad and Mega ETH finally going live. Hopefully, seeing mainnet and seeing the rubber hit the road. Because yeah, I mean it's been a bunch of hype for a long time, so I want to see innovation and cool stuff happening. So that's like the first thing that comes to mind.
Are you gonna be a big Monad guy?
I mean, depends how much like give the Monad cards, I guess. I don't know, and how much there is to do. I'm also, yeah, I'm a Mega ETH fan as well.
Very good. Just whoever gives them more money.
I mean, just whoever's got more motion,
Very good.
more cool stuff happening.
How do you think about those two? Because like, I know you are against this spot specifically, but like the L1 premium versus L2 premium, do you think like inherently Monad is going to command a higher valuation because it's just a layer one, while Mega ETH benefits off being an L2?
I think in the short term it might be priced higher, but I think in the long term you should not have like an L1 premium should not exist, and it's been compressing over time because it's all just chains and bridges, and your chain should be optimizing for REV, or if you have like an enshrined application revenue, and everything else like your tech stack or if you're posting data somewhere is irrelevant.
I have a question for you.
Go ahead.
Is staking actually, would you say it is like a black hole for tokens? Like just having staking, which is obviously not necessarily like a good thing for your token
Like,
in the long
is it
enough
a
term.
token sink?
Yeah, like does that get rid of a lot of the supply at the launch of these things that can kind of command the premium?
Well, I think with liquid staking, it's like been dramatically reduced to like what it could have been. Like if you could, what did the Cosmos do where they would like you can unlock it and then you have to wait 3 weeks to get your token back,
Yeah, it's
right?
a 21-day unlock.
Yeah, the 21-day unlock. Yeah, like that. That's a token sink, right? Like that actually is.
Yeah, I was gonna say the same thing.
Like Sol is is it 2 epochs? I think it's like 3 days. That's native.
roughly 3
Obviously,
days,
everybody uses Jito.
Yeah.
And then Jito will have its own Sol reserves to like, I imagine, fulfill immediate demand of like unstaking. So I guess not. Does this answer?
No, I think it does. I mean, I'm always curious of just like giving people something to do with the token, like
Yeah.
throwing it out an arbitrary number and being like 7% APR if you stake it. I think that gets enough people to be like, maybe I'll do that rather than sell it. I mean, if you add a third option into buying and selling, and it's people already have tokens, then maybe staking rather than selling kind of happens here and there.
I think people over-index on the token sync stuff because now people would talk about pump fund launches and like, oh, they're getting Sol, but Sol is also being locked in the LPs. But when you actually look at the numbers, it's like not that much Sol actually ends up in LPs over time. So I think people just over-index on supply sinks in general. It's more so like, are people bullish on this asset? Will they hold it? Like the sinks themselves largely are irrelevant.
Yeah, I can agree with that. I saw a few of these tweets today, and it's like, Like Pump is still making $1 million a year. I mean, its revenue is declining.
$1 million a year.
$1 million a day. Sorry.
Yeah.
Revenue is declining, but I mean, $1 million a day at what is it? 3.5 bill market cap, FTV, whatever it is. FTV, like that's quite cheap. But I mean, the argument here is like, do people want to buy it apart from it buying back its own token? And it seems to be no. Like, do you think that also like, okay, it's staking, you can give utility, but even if you have your like buyback, some form of value accrual, unless you can command enough attention such that people are like, okay, I actually want to buy this token, it doesn't really matter. Like we saw it with Rollbit as well. There's probably some crime there as well, but it's like if people don't want the token, you can buy it back as much as you want. They're just not going to buy it back. Like they're just not going to buy your token.
Yeah, I get that's true. But at what point do people run out of tokens to sell? I mean, if they're able to buy this much back every single day for the next 2 years, like at some point it's going to hit a wall where it will have enough price impact. Like they can't just mint infinite tokens to sell. So my opinion is like on a long enough time horizon, if you think that Pump will continue this amount of activity, you should probably own it. Like, out of everything in crypto, then it's attractive. But again, like I think there's worries that if they start making more money, they can cut buybacks back to 25% of revenue. Like I think that there's a lot of unanswered questions, and like they've done a good job to show that they are willing to support the token, but that people don't know that their $2 billion in cash might be. Do token holders get any part of that, or is it going to be used to build out the protocol? Like, I mean, I don't think there's been anything officially or legally said that would make people know that.
I also wonder how much of it being cheap is relevant to how ephemeral the revenue might be, just in the nature of you need new token launches constantly. We saw what happened with Bonk. It took a good amount of market share at one point of new launches. So I think there's maybe some concern on the sustainability of the Pump sort of revenue model as a whole.
Are you concerned? Are you a Pump holder?
I mean, I was concerned. Before, Bonk.fun and Radium's Launchpad, I figured, I mean, just the nature of Pump Fun is you need constant new token launches. And so as a result, I figured it's pretty ripe for market share to be stolen, and I still think that's probably the case. And I think we'll see some back and forth. Maybe a new launchpad comes out, maybe a new chain becomes the place people trade. I don't know. It's a hard thing to like look 5 years into the future and think, oh, this is the thing gonna continue to be the thing that people trade.
Yeah, can you imagine looking back 5 years ago and thinking, oh, this has to keep going?
Exactly.
Yeah. Teddy, what are you excited about over the next 6 to 12 months?
I think based on your earlier conversation with Paul, I am excited about Plasma One, and we're investors in Plasma, so I should say that. But I'm also on the wait list for Plasma One.
Very good.
And I think all these cards are generally interesting to me. I just know kind of how the offboarding process goes, and it's kind of painful. And I think that there's a lot of people that would like to make that simpler. Like you try to withdraw through Coinbase and they try to auto stick you with the instant withdrawals with like a 3% fee on your money. Like every time I have to like go back and like exit out of that. It's like, no, I'm not paying 3% to get 1 day shorter into my bank account. So I think that there's a lot of things that are interesting happening over there. I think that the DeFi ecosystem has been impressively built out so far. You can probably
shout out River.
Yeah, attribute a lot of that to the incentives program, but I also think that they had a lot of things to do, and like USD AI, like whatever you want to say about it, I think that there's questions to be asked there, but like they're building a kind of interesting novel product that there's like demand for.
GPU powered stablecoins.
Yes, and I think of it more as like a vault too, rather than a stable, like similar to Ethena. It's like
strategy backed.
You
don't want to hold your life savings in it, but it's worth getting the extra yield if you have to. You can mix and match a little bit. Would you agree?
Somewhat agree. I mean, you should be compensated for the amount of risk you're taking on with this kind of thing. And I'm not sure. Like the reason why I'm not participating is I don't think it's sort of worth it. Although maybe in the short term it's worth farming, but that's just the way I see it. Yeah.
Sorry, finish up.
I was gonna say I have no idea how well the collateral holds up. Like if you use GPUs for 6 months, are they worth 80% of what they were when you bought them? Are they worth 30%? Like, does it
Yeah, how do you
depend on who's using
depreciate
them
it?
and how they're taken care of? Like, I just don't know that. So like,
Yeah.
I think that's the right question. But I know that like you see Sam Altman going on podcasts saying GPU financing is like a completely underserved market and it needs to be done. And I think crypto is a great spot to kind of just serve as a base for allocating capital and pooling capital. So it's cool to see it in the credit markets as well as just random tokens and meme coin launches as well.
I think that makes sense. To be fair, they are like 98% backed by stables, but then they announced their first loan last week, and I have a few friends who are like, "Oh no, like I thought this was gonna be fully stable going back. I didn't actually think they were gonna get any GPU loans yet."
Yeah,
So
they're farming the token, the USD AI token,
Yeah.
but like at the same point, the token could be worth something if this loan like is interesting. It's
Yeah.
$500 million. Like I don't know who the borrower is. I should probably look into that. I don't have any money there, but I think that's interesting. I think like if Plasma can become a place where you have like a bunch of different options on the credit side and like tokenized asset side as well, it's like okay, it's coming together. It's like not only a payments chain, but like a place you want to hold stable coins or like real value in crypto.
Yeah.
So I think that's just like an interesting concept that we haven't quite tapped into yet.
No, I definitely agree, and I think USDI is pretty cool because, like you said, like we need some new, interesting things coming on chain as opposed to like what we've been seeing. Wes, you're not really a big yield farmer, I've realized, and you also don't lend or borrow a lot. You kind of just buy and sell.
Yeah.
Yeah.
It's kind of.
Have you been burnt before?
No, I just don't think you're being adequately compensated for the risk you're taking on. In most cases in DeFi, people I think get too comfortable placing their money somewhere on chain and like just like don't appreciate smart contract risk and whatnot. So I'd rather not like pick up pennies in front of a steamroller and getting 13% yield. I'd rather trade assets that I feel like I have good alpha on or a good judgment on. Yeah.
Are you
Rather just sell calls.
I mean, not that. I mean, I'm not maybe covered calls, but yeah, no, I'd rather not like chase yield. I'd rather trade.
I think that's
what I get
true.
at. Yeah.
Yeah, I very rarely. I don't even stake anything, to be fair. I'm not a big staking guy as well. I get nervous. I get very, very nervous. Another thing is that I like immediate liquidity. I feel like I can make a lot more money if I'm just like if I have cash to put in at the right time, as opposed to like if I'm just infinite farming Aave like 4%.
Yeah, I mean, I think these assets are volatile enough where 5% on your money a year in like dilutive tokens is not enough for you to be like, I want to be locked for a month. Now, I think at some point in time, maybe that's true when it's not just dilutive yield and the assets become less volatile. But
One thing I feel like we don't talk about enough is that Sol, talking about dilution, is like Sol has hit its 2021 market cap way like months and months ago, and now it's like double it. If you are thinking about like how you want to allocate to these things, are you actively considering market caps and in the way that you trade, in the way that you buy and sell, or are you still mostly thinking of like direct comps? Because this is something I was thinking about. Like when you think of ETH, it's actually not hit all-time highs. No, it has, but not to the point that Solana has. Is what I'm saying making any sense? I know I'm asking very horribly, but
I think it makes sense. I think it depends on your time horizon completely. Because I'll have trades that are day long or a week long. But if I'm holding something for a very long period of time, I'd certainly take into account changes in issuance and supply. And I'd mostly go off of FTB versus market cap. I think it entirely depends on the time horizon of your trade or investment.
I think with something like Sol, it's different than like Lido as well. If you look at the Lido like FDV chart, and it's like you watch Lido just get billions and billions and billions in deposits, and like the price never.
No, it's always $1.
Yeah, the market cap chart looks great. You look at the price; it's been the same. So I think that one's a different one where it's like token holders aren't getting any of that inflation, so it is all dilution. I think that with Sol, like again, maybe we don't want to stake, but you can stake, and I think with the staking ETFs that will hopefully be approved, like then it shouldn't matter as much. But I think it's definitely tough for like an investor to want to own something that they're going to be diluted in, and they don't want to necessarily have to stake. So like, I think it's something that chains need to think about, and it's like, do we need to be paying this much, and the validator commissions need to be this high?
Yeah, I think that's a great point. Like where the issuance is coming from is super important, because if it's a proof of stake chain, you as a token holder have the right to the new issuance, versus if the issuance is being used for farming incentives or the issuance is just unlocked tokens, completely different. And that certainly changes, like the investment perspective of the thing.
To end things off, I already asked my typical ending things off question, like the 6 to 12 month thing. So I have another one. If you could only bet on one chain going forward, and Teddy, I'm gonna ban you from saying Plasma because you're an investor and you already said it. Which chain would you bet on?
What's the time horizon?
12 months to 24 months.
And I'm betting on the native token.
You're betting on a native token.
That's a good question. Probably Solana.
Maybe Hyperliquid.
Yeah.
I'd say Solana and Hyperliquid are.
You have to pick one
out of all my live chains. I don't know. I'd say it's definitely like the way that Solana feels like they're making improvements and kind of targeting the right things compared to ETH. It's not like a big gap between Hyperliquid and Solana, but it does feel like Hyperliquid has a lot of momentum right now. So I wouldn't bet against them.
Very good.
But
very good. I would also
bet
the
right answer.
I think that's the right answer. Westy, we're going to be having a chat later on. Guys, I really appreciate you coming on. This was really fun.
I agree. Thanks for having us.
I appreciate it.
All right.
Structure? How do we supplement the incentives even higher, where we're not taking any incremental risk, but actually they're just offering more of their native tokens? So we do that calculus, but it's very much, when I was in Singapore, I was thinking I was going in for many conversations around liquid alpha, but actually, I would say 50% turned into, oh, we're actually launching vaults. Is there something that you can do there? It was eye-opening. People that, again, Standard Charter and all these guys that you wouldn't think would even think about doing it. But that's amazing because it started at the genesis of a brainstorming idea about a year and a half ago. But now it's grown to one of the biggest parts of the business.
By the way, Lewis, I love how casually you dropped $1 billion as a yard. I think when I grow up, I want to be that cool and nonchalant. Very cool. Ryan, can we talk, please, about where we are in the SEC regulatory adoption cycle? We've talked a little about the upcoming. We had the Clarity Act first of all in July, and now we have the next broader act coming up to regulate the rest of everything in digital assets. I think this will really bring in the next wave of money, and we already see over 100 ETFs lined up. Right? You have any insight to share there about what to expect, where we see the flows, et cetera?
Yeah. So the past 12 months, really, in the regulatory and legislative space in the US has been phenomenal. It's been just the most incredible amount of traction and activity in a long-term tailwind as one could possibly imagine. And we've been at Bitwise just working day and night to file for as many ETPs as we can, to bring these products to market, to think about how are investors going to want to gain exposure to stable coins as they grow from 300 billion to 3 trillion, and they want to express their interest in that allocation. Does a publicly traded equities ETP that has companies like Circle or Coinbase make sense? Or do you want to provide some kind of thematic stablecoin crypto asset ETP, something like that? All of those things have been happening, and then it went on pause when the government shut down. So we've had a bit of this kind of sprinting and then stopping. But what we believe is going to happen is once the government opens back up, there's just going to be an onslaught of ETPs launched, and there's going to be something like 25 of the largest crypto assets will meet the generic listing standards that the SEC rolled out, which means that it's a much easier path to listing as an ETP in the US than historically it's been. You won't have this 240-day waiting period that you've had for the Bitcoin ETPs and for the Ethereum ETPs. So we're really excited about that. I think investors will all of a sudden have this big menu that they can choose from. Now, most of the investors that we speak to, these financial advisors and RAs, don't know that much about crypto, or they're early on in their journey. And so they're excited about Bitcoin. They've maybe heard about Ethereum because they hear about stablecoins and tokenization. Maybe they've heard about Solana. But once you get past those assets, we really don't get a lot of questions. Maybe XRP, maybe the Cardano question every once in a while. So I think it's going to take time before flows go into those assets, certainly. I do think there will be more crypto enthusiast investors who do want to go out down the risk curve and they want to choose the lower cap assets. But I also think what's going to happen is you're going to see more thematic and more index funds come to market, which is another element of this generic listing standards that's going to be a huge unlock for asset managers like us at Bitwise, is we can now offer more interesting and compelling and kind of own the market with a basket of assets rather than having to bolt on your own kind of portfolio. So I think that will be where a lot of capital flows. Certainly, if you think about the ETP market today, it's like a $20 trillion market. It's a huge market. And right now, Bitcoin ETFs and Ethereum ETFs are like 1% of that market. And I think that will grow to 10% or more of the ETP market once we have more ETPs, once we have index ETPs, and once we have much more options for investors. And now that we have that regulatory clarity and we have the lack of an attack on the industry from regulators and from the administration, investors are sighing a bit of relief. They feel like they can start allocating. They feel like they can go tell their clients they own crypto. And I think that's also a huge unlock. And I think a lot of people are actually missing how big of a catalyst that is and how many years that's going to continue pushing the industry forward.
Just really quickly, it's interesting thinking about the reverse of that. So I just had a notification saying, the S&P putting sort of stablecoin data or risk ratings on chain through Chainlink. Point being is that obviously there's a lot of sort of real world data that could be plugged into Web3. So one of the things from a vault infrastructure standpoint that we're exploring is indices, on-chain indices, and kind of reviving that old chestnut that we saw a couple of years ago. But you could conceivably do it over anything. So we've been experimenting back in the day with AI agents. Was there any appetite there? But there's a huge design space. And if we're able to do it in an efficient way and collapse the cost of managing it in a vault setup, then that's pretty intriguing. So it's almost like the reverse of what you guys are doing and seeing what the opportunities would be from that.
Ryan, you mentioned a few times like the benchmark, and I think what's underlying all of this is that right now we're a lot of the service providers and index providers are almost in a war to figure out who is going to be the S&P 500 of crypto. Because once you identify what it is, whether it's an equal weighted top 10, equal weighted 100, asset weighted, whenever we find this out and people really start to benchmark that, we get the passive flows and we get everything that's kind of indexed to that. And, and look no further. Remember, Coinbase was introduced into the S&P 500 in May. And then by June, all the catch up that had to happen, it was the best performing single stock out of 500. It was up like 40 or 50%. And that's exactly what we will see. But right now I see, so my role day to day is to cover crypto managers. And I see almost every other manager has a different benchmark. And of course, the game is for them to produce a benchmark that they look better against, that they're producing higher returns, higher alpha against. But, it'll be interesting to see how this shakes out. Because eventually, we will come to some consensus that this is the S&P 500 of crypto. Maybe it will simply be Bitcoin itself, or maybe it will be some kind of index of all of it. But really, it's all over the place, and that's why there's so many opportunities. There's no standardization yet.
Yeah, I think we're very early on in the journey, to be completely honest. I think Bitcoin is broadly looked at by the investors that we speak to as the market or as the benchmark. Of course, at Bitwise, we're biased that we believe the Bitwise 10 large cap crypto index will be the S&P 500 of crypto. So, of course, I'm a little biased to that. But what we've found is that investors like the idea of, hey, I can just buy this one fund. I can own 80% of the market. And I know that it's managed by people that spend 100% of their time thinking about the crypto market, right? Because most of the institutional investors who are allocating to crypto 1 to 3 to 5% are spending even less of their time than that on the crypto market. They're thinking about bonds and equities and the tariffs and trade wars and fiat debate, like all of these different things. And so what they want is just one-stop shop. And that could come through things like DATs or like, for instance, we have an index of DATs. So if they want exposure to that theme or they want exposure to a bunch of companies that are trying to outperform the index, then they can get that exposure through an index fund. Or they can go through a vault, for instance, and kind of try to outperform the benchmark. But I think the benchmark is Bitcoin. I think, like I said before, indexing is going to be a huge part of that. And ultimately, the benchmark will transition to something like the Bitwise 10 large cap crypto index.
Yeah, I hope so for your sake. One cute analogy I've heard, which I'm quite partial to, is that Bitcoin is the benchmark for almost the equity-like benchmark. And the ETH staking yield is like the risk-free rate. Like if you can't beat 3%, because remember, like if you invest in the risk-free rate, you don't get appreciation. But with investing in Ethereum, you get the hopefully price appreciation and your risk-free rate. You kind of win in two ways. So like that's exactly what you want to own is the risk-free rate with asymmetric upside. But I kind of like that. That's kind of like the cost of capital is you should at least be getting that kind of risk-free rate of return. We have a few minutes left. I think this weekend was such a shock for the whole. In fact, it was a shock in one sense, but it wasn't. We knew that we would have a big liquidity crisis coming someday. We didn't know it was going to be this weekend per se. But I think we were all kind of expecting that eventually this is what crypto does. It has crises, it recovers, it grows stronger, and it gets better. But maybe any takeaways from any of you guys about how we performed, how the industry performed, where we go from here?
I'll go first. I mean, I was fortunate to look at the whole developments with a pretty level head because we don't take leverage in the fund, thank God. Takeaways, and we're talking about it backstage actually very briefly. For me, it's really understanding how things work, especially on the perp side, and hearing of large entities that have positions on, let's say, hyperliquid and not realizing that they could be liquidated even if they're on the right side of the market, sometimes on the bets. I think it's just a bit of a wake-up call to really understand that there's no system that is perfect. Educate yourself in how it works. That's definitely the highest level takeaway. And I think from a market structure standpoint, we're still pretty constructive overall. I think market right now in the short term is trying to find its footing. So there's a bit of a recalibration period, I would say, right now. But from a macro standpoint, nothing's changed despite the sort of liquidation event that we did see. So I think for us zoomed out, we still think a lot of these kind of fractals have been respected so far. But we're really going to be taking it week by week, day by day.
Do we think this was a flash crash or the beginning of something more long term?
I'll jump in. I think that this past weekend, it's fortuitous timing for this panel because it actually captures everything we were talking about. So first, active versus passive. The people that were passively just holding spot, especially the index type crypto assets, Bitcoin and ETH, they didn't really sell off that much. I mean, it really honestly wasn't that noticeable if you're just passively holding spot. So it shows that people that start to mess around in more active strategies with 100x leverage in tokens that don't really have that much liquidity or honestly have an inflated market cap, those are the ones that got absolutely destroyed. And that's where do-it-yourself active may be a little bit tougher. And maybe the call to action is let's concentrate on a few blue chips and like Bitcoin and ETH, and then use a much smaller portfolio size for alts. So that was one takeaway. Does it happen again? We flushed out a lot of leverage. So I mean, it was almost, this felt more like a flash crash that we bounced back from than a structural issue. And the structural issues exchanges were very quickly identified, and then we'll get past them. But I think we're gonna resume our uptrend very shortly.
Yeah. To be honest, for me, the reminder was the power and importance of diversification in your portfolio, like not just from strategy, but also counterparty, right? Like which exchange are you on? Which instruments are you trading? There was so much going on. And, over these last few years, I've been pitched by so many of these different funds and different trading, different SMA strategies. And to see 1.6 million accounts be delivered automatically was such a shock. Like some of these had pitched me how great their risk management were. And I'm finding out where all the bodies are buried. How many of them are worth zero, like gone from 100 cents on the dollar all the way to zero, and you can't recover from zero. So for me, having this like diversified approach really was just reinforced by this crisis we had this weekend. And I think we are basically out of time. I want to thank my panelists and thank you all.
Thanks so much. So moving on from our investor track, we've had the first two panels that have touched on the quest for on-chain yield and outperformance versus some benchmark. Next up, we have a discussion to go a bit deeper on both of those, the quest for on-chain yield and durable outperformance. Please welcome to the stage Blockworks co-founder Michael Ippolito and Ray Hindi from L1D.
Ray, how are you, my friend?
Great. How are you? Congrats on
Oh,
all the success.
Thank you very much. I appreciate it. All right, we've got only 20 minutes here. We've got a lot of ground that I want to cover with you. But before we get into it, can you just give a quick 30-second intro to you and L1D?
So my name is Ray Hindi. I'm one of the founders of L1D. L1D is a crypto fund based out of Switzerland. We've been in business since 2018, and the way we invest is we invest in funds on the liquid side, and we invest in direct venture as well.
So guys, Ray's too humble to say this for himself, but he is one of the sharpest allocators in the space, and he has a very interesting ground view into what's going on the manager side of things as well. So that's where I kind of want to start this year, right? Like, just give me the TLDR, the kind of year-to-date post-mortem, like, how are our funds doing out there? And if you could kind of separate kind of the liquid funds from the, delta neutrals from the equity only, like, how are our fund managers doing out there?
So funds on the liquid side are not doing great. This year is probably on average one of their worst years. The biggest challenge has been beating Bitcoin, and as we become more institutional, I think some of the alpha came from not being institutional, having the operational flexibility of operating on chains that you've never heard of 2 days ago, etc. And so they've been constrained. Having said that, there are a few specialists. So, for example, equities have done well. So specialists on the equity side, which a few months ago was a restricted universe, have done better. So the liquid side is suffering. Now, having said that, we have to assume and be realistic. Over a 5, 6, 7, 8-year cycle, most of the liquid funds out there, whether it's in liquid, venture, etc., won't generate any alpha. Alpha is very, very scarce. The problem is that this year, the ones that didn't compensate for the ones that didn't. And this is something that we need to see going forward. And I'm pretty sure that we will.
And, obviously don't reveal any state secrets here, but, I'm curious on the liquid side of things, are the managers that are doing best, you mentioned flexibility, right? So being able to maybe be a little bit more risk on in terms of experimenting, taking on technical risk, moving on to new chains. But I'm also curious on what types of strategies are performing on the liquid side to the extent that they are. Is it kind of like, what are the sort of holding periods? Is it more trading oriented? What is working out there?
Yeah, so I would say that there's the few managers that are really performing form a sort of a barbell. So I can describe it by looking at, emerging managers out there, so small size. So I've got one manager in mind who they've started their business in 22 or 23. They've started pretty aggressively by building their brand. They're fundamental in nature. But based on the fact that they run roughly $30 million, or were at $30 million at the beginning of the year, $25 to $30 million, they were able to get into situations that are less liquid, still in a diversified way, by capitalizing on that true fundamental meta that we've seen. So looking at cash flow, being very active with the projects themselves to create catalysts for positive price action, etc. So you can think of early to so you might guess who I'm talking about, but early to maybe Camino, early to SERP, early to MetaDAO, etc. So a name that you wouldn't have heard of 2 years ago that today you hear
all the time. Yeah.
all the time. So that gradual brand build-up while staying very nimble and small served them really well. A team that is very hungry, very small team. So that's really, really important. Because, it's easy. A lot of allocators always prefer to invest in emerging managers with, smaller AUMs. The assumption is that everyone's hungry, everyone has the capacity to generate alpha. The reality is that this is not the case. But if you are, and it's an advantage to be smaller. Now, there are, funds from the past cycle that have done extremely well. But unfortunately, even if you've had a fund that has generated alpha in the last 5 to 6 years, there's no guarantee for alpha going forward. In fact, in most cases, you can guarantee that they'll generate negative alpha. And that has to do with the unfortunate curse of the wealth effect in crypto. Whether it's whether you look at founders, you can name how many founders that became wealthy keep on going and pushing their projects forward. They're pretty scarce. You can apply the same with a GP out there. A GP that was very successful from 2018 to 2021, 22, etc. Today is, in most cases, you've got 3 scenarios. One, they give up on, they close down the fund and manage their family office. 2, they soft drug, which means that, hey, we're all human beings. We have different interests at different levels of wealth. And they start, but they want to keep their business going. And so the way they manage their business shifts in a major way. And some of the signs are very, very apparent. So for example, the major risk taker will start hiring more people and delegate a lot of functions. And you'll notice that the major risk taker is no longer involved in analyzing a deal or in discussions with the founder because those roles were delegated. What they want to do in terms of running their GP, if they want to, have a better life, better quality of life, etc., and be less involved, they need to collapse the volatility of their revenues, the GP's revenue. And the way they do that is they start delegating to other team members and become, instead of being risk takers, they actually become risk managers. So they've got ideas that are pitched to them, and naturally, and that's in line with the fact that they want to compress the vol, they become over diversified. So diversified portfolios this year underperformed heavily and generated negative alpha. The only ones that did well were portfolios that were heavily concentrated, i.e. the original risk taker kept the key man risk in play and pushed for the deals that they know best. And so this is the only format that actually works. So the barbell of emerging managers that are more nimble, that are still hungry, and your extremely wealthy GP that is still hungry for some reason and still pushing and expressing their conviction accordingly.
What percentage do you think fall into that second category?
I'm not sure how many funds we have out there, but I don't know, maybe 0.1%.
So pretty scarce.
I can think of one.
Okay, very scarce. Okay, let's talk a little bit about the allocator side of things. So, one hallmark, I'm just thinking about the quantum of capital that I see show up in venture deal sizes. And when I'm thinking back to 2021 and 2022, massive, 100, 200, $400 million rounds, you see far less of that today. And I think some of the funds that raise these mega fund, again, 400, 500 million, in some cases, $1 billion funds, have struggled to raise at the same size. And I'm just curious, from the allocator standpoint, how have the preferences shifted, both in terms of willingness to allocate capital, but also, maybe away from some of these mega funds that, to your point, might have gotten a little tired or maybe took their eyes off the ball into smaller funds?
Yeah, I would say that so I mean, in 2021, 2022, we created a crypto VC bubble that we've been paying the price for it ever since. But of course, fact is that most crypto VC funds out there are unable to raise the equal amount of capital that they used to raise, and those are the good ones, the reputable ones. And most of the others are not raising anything, and many are shutting down, and that's a good thing. So, which means that the system is being cleansed, and you've got less competition going forward. I think I think the opportunity set is around those barbells where you're going to have, there's a few big names out there that are heavily respected. Can think of maybe 3 of them that will continue.
What's up, guys? Welcome back to Zero X Research. Today, now I'm joined by Guy from Ethena. Guy, how are you doing?
I'm all right. Yourself?
Very good. As well as David.
Let's say I don't get
and
any
Carolina. Yes, thank you guys
Thank
also
you.
for joining.
Thank you.
Guy, very busy weekend and a very busy Friday. What did you guys see on your end with all of the volatility across markets?
Yeah, I was actually stuck on a flight coming back from New York with Wi-Fi that was cutting in and out, which was not the funnest experience I've ever been through. Yeah, I'm not sure where to start. I think it was just obviously a pretty insane, the scale, speed, depth of how everything sort of collapsed. I think pretty eye-opening experience, I think, for me, where I thought alts just generally had a bit more liquidity than it appeared, and it just felt like the floor sort of like fell beneath the entire market. So I do have some concerns, like longer term ramifications. Does anyone sort of in TradFi look at this market now and think it's like an investable space when the floor can just fall below your feet and like minus 60, minus 80% in 5 minutes? So I think there's going to be a slow sort of rebuilding, trust building exercise that we need to go through sort of an entire space. So yeah, sounds like a pretty negative comment, but it was a pretty eye-opening, I think, experience.
Yeah. One thing I wanted to bring up is we talked about this last time you were on the pod. Hard-coded $1. I think you were kind of proven right? What would you say on the Friday thing?
Yeah, I mean, it wasn't. We obviously don't set the oracles on Aave
obviously.
ourselves. We did support that idea. I think the basic idea, and I put a thread out on this on Twitter this week, was kind of you're really asking a question of what are we trying to solve for with oracles, which is a temporary dislocation in price. Are you scared about that, or are you scared about a permanent impairment behind the collateral? And I think the point that I was making was that actually, in most scenarios, you're wanting to actually just stop people getting liquidated for an unnecessary reason, which is actually what DeFi achieved, I think, in the last weekend. But then you can always have something that actually flips to like a proof of reserves, which is saying we demand Ethena to prove like how much is actually sitting within the collateral, and if there is actually a full impairment, then you can adjust the oracle to reflect that. So it's one piece that I think Chaos Labs is doing pretty good job on, which is actually allowing that toggle to exist. And I think that's sort of direction where we need to go with these things. Yeah.
I think that makes sense. You guys have anything you want to add? Since they're the risk people, I'm less risky.
Less risky. No, I just wanted to add that actually it would also probably be fine on chain. Ethena's price, SEE's price was pretty good, and it would still probably have holding up.
Yeah, I think that was one piece of misinformation spreading around the market, which is like if Aave hadn't done this, DeFi was a zero. Actually, Aave was completely fine. Like, it literally depegged less than USDC did in Curve, with nine figures of liquidity sitting in there. So even if Aave had just tracked the Curve price sitting in there, nothing would have happened on chain.
I do think that, correct me if I'm wrong, you probably know better than me, but I think Chaos Labs had also mentioned that currently they obviously have the POR or Oracle, but that's not embedded into Aave's infrastructure. But I do think that they're planning on iterating on the current Oracle infrastructure. So it's no longer hard pegged to one, but it actually will be, primarily using the POR and maybe have a fallback mechanism after that. So that is...
Yeah, that's correct. I think you should sort of view this hard coding piece as more like a
temporary
stopgap, temporary thing with the view of getting towards proof of reserves. And in many senses, I think that's where every single RWA asset issuer who's doing anything which isn't fully
100%.
verifiable on chain, you need some sort of verification method for proof of reserves in the back.
How do you, like, during this 10 Sigma event, like, obviously you guys handed over $2 billion redemptions within like a 24, 36 hour period, which is obviously really impressive. Was there anything that you were not, obviously didn't expect the event to happen, but was there anything that I guess happened that you maybe weren't expecting, given the ramifications of like all that kind of unfoiled on Friday?
Yeah, I think it was just kind of market structure breaking down on venue specific
Sure.
places. So there's also pretty wide dislocations in pricing between Curve and then a bunch of different exchanges that sat around it.
Yeah.
I think that's one piece that we just want to work with different platforms that we're working with now to actually just make sure have we actually aligned with the right Oracle decision here, because at the moment everyone's actually applying something that's slightly different across every venue.
Right.
So I think that the disparity that we saw, like dispersion between different venues, was a pretty shocking thing to see, and you can kind of see it in the data as well. But yeah, I think from our perspective, people sort of forget a little bit that actually Athena's pretty well positioned going into these events, because when people are getting liquidated, the perps tend to trade at a massive discount to spot. And so in many senses, the only thing that we're actually doing when the market is imploding is just trying to close those positions as quickly as possible to capture P&L. And it's just, I don't know, people freak out every time the market crashes, and we're sort of sitting there on our side going like, we're actually in a better position than we were in yesterday while it's happening. But it's, I guess, the trigger. But
yeah. One thing I wanted to bring up is I'm noticing more and more that you guys are getting the white labeled stable coins, like the Mega ETH one was one, with Jupiter as well, if I'm not mistaken. Is this something that you're going to be more and more focused on going forward, like with I guess fiat backed stable coins launching over different protocols and chains?
yeah, for sure. I think the week where we came out with Mega ETH USDM, and that was the week that coincided with Hyperliquid's USDH proposal. I do think that there was a very sort of a shift in like the Overton window for the industry on that week, where everyone sort of woke up and said, if we have distribution, if we have users on our platform, how are we not thinking about sort of trying to capture some of this value? And I think that there's been a very noticeable shift as well. I think even with like infrastructure projects now, when everyone's focusing on the revenue meta, which obviously isn't the meta, it's just kind of like
Capitalism.
corporate finance. But the revenue meta itself, chains are sort of asking the question of like, what happens when MEV as a percentage of like transaction volumes is like trending towards zero? What else can we do to actually generate revenue as a layer of infrastructure? And the easiest answer is like, if you've got billions of dollars of stablecoins, there's 9 figures of interest income that's actually sitting within those balances. So what I can say is like, we've really only launched this product 2.5 weeks ago. We've got Mega ETH, SWI, Jupiter, and I'd say 4 of a similar level coming out within the next sort of 2 to 3 weeks. I honestly think within the next month, you'll have 50% of every single app, wallet, and chain producing one of these in the market. It was probably the busiest 2 weeks we've ever had in terms of like inbound BDs after that whole Hyperliquid proposal. I think there is a question of like, is this the correct user outcome? Because like, do we really want 1,000 stablecoins with like everyone's got their own little branded thing? Creates friction, it creates all these different pieces that are suboptimal. But unfortunately, I think that is where we're going. I say unfortunate for like the users perspective, because like I think the great thing, the real outcome that everyone wants here is actually we all just agree on one token and you share the economics with everyone basically. But unfortunately, I think people's sort of egos and own economic interests drive us away from that outcome.
Yeah, I think that makes sense.
Can I actually lean on?
Please.
What do you think this means? Like, what's the long-term implications for Athena's business model with like the stablecoin as a service offering? Like, in terms of like
just
value
enhances
capture,
our distribution. We make slightly more on the stablecoins as a service than we do on just USD and USDTB. And you can really think about it as, if a project is starting with USDTB within the white label offering, they've always got the option to switch to USDE in the back end if they want to. And the view that we have is that people will start with USDTB, which is obviously lower margin to start with, but as interest rates start to decline and everyone gets more comfortable with us as a partner, they go, okay, well, maybe I can get 10 instead of 3 in a year's time. And so really it's a way of us distributing USDE in a multi-phased process. But yeah, we make more money on those products than we do on like the underlying themselves. And so I wouldn't sort of say it as like us disrupting ourselves. It's more us really undercutting the margins of competitors.
Makes sense.
One last thing I wanted to ask is about HIP free. Is that something that you guys are focused on, like Hyperliquid integrations?
Yeah, I think we spoke about it publicly within that USDH proposal. There is going to be a front end that's launched with USD collateral redenominating the whole exchange. I think from my perspective, that's 2 of like the killer products within crypto jammed together in the same place, which is like dollar worth of return plus perps trading. And when you put them together, it's a pretty cool user experience. So there is a team that's picking that up and building a front end there. And obviously HIP3 came out yesterday, so should be pretty soon. Yeah.
Very good. Do you want to ask something?
Yeah, just I had a question, and we were talking about money, making money with the underlying. I feel like there has been a shift. Like right now, there's a lot of liquid stable backing in USD. Is that like a broader move to have like backing assets on chain, or is it just like it's just happened because yield is better there?
Yeah, it was just a rate-driven decision. I think the market's been in a funny place. I think in the last 6 months, where you have a bit of a spot-driven rally with like Tom Lee and Saylor buying, and then everyone's like, all right, they've stopped buying, so then the market crashes, and it's just this sort of like endless loop where I think no one has the confidence to be fully levered long in the same way that they were when Trump was sort of coming in Q4 last year. That's kind of like the perfect scenario, which is everyone saw this sort of great tailwind that was there, which is like Trump's coming in and there's going to be deregulation, all these different pieces. Let's front run those spot flows via derivatives, and we could sort of like benefit from that. It's almost been the opposite now, which is like sporadic spot flows come into the market. Everyone's like, all right, well, when this runs out, do I really want to be long ETH above 5K? Like, I'm not so sure about that. It just makes that a challenging environment for a consistently like frothy rate environment within perps. So if we had capacity to do 15 bill, which is where we were sitting last week in perps, I'd like to be 95% in perps, but the market didn't have capacity for that at the moment. Yeah.
Makes sense.
I think that makes sense. Guy, last question. Next 6 to 12 months, what are you most looking forward to within crypto?
Within crypto?
Yeah. Or anything. It can be personal as well if you want.
Athena going to 100 billion USD.
Sorry, I thought you meant Athena versus crypto. Personal life. I think equity perps are probably the most exciting product that isn't scaled, but is like the opportunity size is like bigger than the market cap of Robinhood, I think it might be. So I think someone's going to make a incredible business out of something attached to that. And I think it just feels like one of the most obvious opportunities where retail flow on options doesn't really make sense as like the instrument of choice to express leverage.
Yeah.
They're not really there to price a Greek or price vol. They just want leverage. And I think crypto has shown that people prefer perps over options when you give them the choice. So you've got a asset base which is 30 times the size of crypto, i.e. US equities, and a superior instrument, we think. And yeah, I think someone's going to do very well in that space. Yeah.
I think that makes a lot of sense.
Okay. Yeah, like I guess briefly, have you guys shifted your attention towards like this white label stablecoin service product, and also maybe like the HIP3? Maybe it's a separate team that's building the Athena-based hyperliquid market. But any thoughts on what's going on with Converge? Is that taking a step back? Are you guys?
Yeah, I'd say slightly deprioritized versus the things that we've been talking through here.
You have a lot going on, so I get that.
Yeah, and slightly small lean team, and I think there's obviously been a lot going on with DATs. I even think DATs as a potential consumer of our product is also an interesting avenue, which we haven't spoken about as much, which is a lot of these DATs are going to be competing on the axes of how much money can we raise from TradFi to deploy into stuff like USD on chain. There's a bunch of them who are beginning to work with us now. And I think that that's actually one of the most interesting conduits for TradFi money to actually come in at scale on chain, because it's almost like an open-ended format where they're just like, here's my money, go and take as much risk as you can to like generate return.
Yeah.
It's kind of what the mandate of most of these things are. And so I think for the first time, you could have like real connective tissue from TradFi into DeFi at mega scale. And this is kind of like, we got the perfect product basically for them to come into there. So I think, yeah, they're changing sort of priorities through time. Yeah.
Makes sense.
Guy, thank you so much for coming on. This was a lot of fun.
Appreciate it. Okay.
You're welcome, Boccaccio.
Guys.
The crypto ecosystem more broadly. This year, we're seeing the stars align. And what does that mean? It means we're seeing founders and owners of businesses more interested in transacting and more open to coming to market. We're seeing regulatory shifts in the US and globally, which is making the space more attractive for fintech and traditional financial institutions. And we're seeing more crypto businesses go public. And what does that mean? It means more businesses that are able to deliver liquid currency into deals. So fundamentally, we're seeing a lot more M&A activity, both in terms of sellers who are interested in coming to market and buyers who are able to, one, deliver meaningful valuations, and two, deliver interesting transaction structures for sellers. So it's been busy on our side, but I'll hand over to others too to share their perspectives.
Yeah, or maybe before we ask Casper about his year, who in this room, quick show of hands, has been involved in a M&A transaction or IPO in their career to level set? Okay, so we have a room of experts. Out of that group, who has been involved in a crypto M&A transaction or IPO? Okay, so that's almost 100%. We have a crypto M&A expert crew here. So let's go a bit deeper maybe, Casper. What do you think makes crypto M&A unique, even within, let's say, the more traditional M&A context? And yeah, tell us a bit about the differentiating factors that you see in crypto deals. Why, for example, also is an advisor with crypto expertise better positioned to work on crypto deals, or what is needed really when you take on deals as Spartan?
Yeah, sure. So I worked for a long time in traditional M&A at Goldman Sachs, where we would have industry teams. I sat in the natural resources industry. I covered power in form of coal, gas, nuclear, renewables, chemicals, upstream, downstream, midstream, oil and gas, upstream, downstream, midstream, infrastructure. So obviously, in each of those segments, I was not an expert, but I was running these billion-dollar M&A deals. And could kind of get by because these were like very late stage companies. The deals were $500 million and up. I think crypto is still, because we're still quite early. I mean, there have been up to $3 billion kind of transaction sizes with the Deribit deal, but generally the deals are earlier stage companies, which requires more work from the advisor as part of the transaction to kind of just get the company ready and a deeper understanding of the industry. It's also a lot of the companies have relatively young founders who maybe this is like their first job or they haven't done that many other things and they're very passionate about crypto. So I think to get a good outcome of a crypto M&A deal, you need three things. You need M&A product expertise, which you only get by doing it for 5, 10, 15, 20 years. It's not like a fundraising round. You can pitch to 100 investors, you have a good pitch, you're a strong founder, you can get it done on your own. Like, I think there's value to an advisor, but an M&A transaction, I do not recommend a founder undertake that by themselves. The second is you need a crypto network. You need a network of people that have an idea of who's the right acquirer for this asset. It's not like a fundraising round where you just hit 100 names and just, you have this funnel that you go through. It's much more bespoke. And then you also need an understanding and passion for the industry and the business so that you can position the company right. So just to make a small plug on that point, I would say we're starting to see what I would call non-crypto native advisory firms come into the space. So the three of us, Galaxy, Areta, and Spartan, we're all crypto native. We're starting to see other like mid-sized banks come in and some fintech banks come in also. And take some market share from us. But I do think that if I'm a founder, I would want, by all means, have people pitch for the work and then select your best advisor. But I think being crypto native is very important to get a good outcome on an M&A deal.
Yeah, I mean, I will pick up on that point because I would say it does not just apply to your M&A advisors. Something that we're very thoughtful about when we're working with our clients is making sure they have the right support across the transaction, whether that is counsel, whether that is accounting, whether that is audit. You need the right people around the deal who understand A, how to get deals done, but B, understand the nuances of crypto and what that means for your transaction. Because what you don't want to be doing is paying people to learn. Fundamentally, you need people who are able to come and deliver meaningful advice and get a deal over the line for you.
Yeah, and that's, I think, even leaving aside the fact that we may see more and more deals actually involving tokens and having unique structures that obviously outside of crypto would have been unthinkable. And so, yeah, there is a new paradigm, I think, evolving in the crypto M&A space, which we're all very excited about driving. And yeah, I think we're seeing an really early innings also on the on-chain and token M&A spectrum. Laurent, how have you seen this year, really? Also, ex-investment banking background, you probably have a very nuanced view as well, especially maybe around token M&A, anything you see in the on-chain world that you think is worth sharing?
Yeah, as a difference to my colleagues, which are more on the M&A side and early stage of any deals, with MEV Capital, we will come more at the late stage. So once the project is live, you need a liquidity bootstrapper or a vault curator to really like to bootstrap, to foster what my colleagues first invest in. The year has been busy, not to take back your term, positively busy. We saw, of course, more institutionalization, not only in crypto, but more specifically on the DeFi sector. I remember like a couple of years ago, we were just between a small scene of crypto bros, as we used to say, to now a more regulatory compliant sector that basically make a huge metamorphosis of what we were doing like 2 years ago. Now I see a real change of the industry that become way more institutionalized. Regarding the M&A, like as a whole, or token M&A, if I may say this way, well, the market is extremely fragmented yet. But thanks to some like, would it be MiCA compliance rules or more clear Genius Act regulation, it allows us to go to the next step on DeFi. And it's true, like I think those next 6 to 8 months, we will see a bridge between like traditional finance to more DeFi. And I'm really happy to work with you guys to help the sector to go this way.
Awesome take. And I mean, we are obviously in the largest or hottest M&A window we've ever had in the industry, but let's maybe discuss a bit, and we haven't even talked about it between us, but where do we stand in that cycle? Like, are we seeing the top? Are we nearing the top? There is so many good conversations now happening, which at least in the history of Areta, which has been basically one cycle, we've been, yeah, I mean, just amazed to see also the new interest coming in. Spent some time actually yesterday with buy-side funds, mid-market PE funds, now looking at crypto assets, which is just an amazing dynamic to see. And as ex-Blackstone private equity professional, obviously want to see more and more of our like-minded financial investors come into the space and help institutionalizing what are already great businesses. What else? What are the trends that you're seeing, Casper? Are there, I don't know, traditional buyers coming in? What are the dynamics you're seeing on the ground that may lead to us thinking we're more advanced in the cycle? And or yeah, just share a bit of your thinking on where we stand.
Yeah, sure. We started Spartan in 2017, so I've been through a few crypto cycles already, and then I'd say we're definitely at a very strong point in the cycle since, or still. This weekend, this massive drawdown that happened and a bit of shock to the market. It's early days. I mean, it's only a couple days since that happened, but in past cycles, I've seen something like that really jolt M&A deals. Even though M&A deals should be long-term and strategic, they're actually very susceptible to market moves also. And this time around, I didn't really feel any of the buyers where we're on the sell side flinch. So that's very positive. At the same time, to your point, I am starting to see some more traditional buyers, and not just like buyout funds, but also strategics. Like if it's a data company, maybe like traditional data company. If it's a regulated exchange, maybe, you know, more traditional fintech buyer poking around. And that to me is, if you think of the market in quartiles, it typically comes, from my experience, in the third quartile of the market. And then you got to get a deal done with them before you hit the middle end of the fourth quartile, because those players will disappear immediately if the market becomes a little bit fragile.
I love that answer. So we still have 1 quartile to go. Alvin, how are you capitalizing?
I'd say 1.5 to 2.
Okay.
Yeah.
What do you think, Alvin?
Look, if I could call the top, I'd be on a beach somewhere sipping Mai Tais, from completely honest. And I see some familiar faces who have heard me say that before. I would say, though, that this is, you know, as people in the room who are thinking about undertaking strategic M&A, and that's the word that Casper used there, strategy and strategic thinking is the right way to think about this. From a seller perspective, Of course, in the moment within a particular process, you want to obtain the best deal possible, but there are multiple different ways to construct the right deal. And that doesn't just necessarily mean top ticking the headline valuation. It might mean how do you get the right amount of liquidity up front? It might mean how do you make sure that you participate in the equity upside for the long term? It might mean how do you make sure that you are able to, if you're thinking about moving on to do something new, able to exit the business within the right time frame.
43 seconds.
What's up, guys? I am here together with two millennials trying to figure out how to retweet a live stream. How you guys doing?
We're great, Bach. How are you?
I'm very good as well. How's that been for both of you?
It's been great. Das is honestly my favorite Blockworks conference.
Not permissionless?
Nothing against permissionless. I just like Das a little more.
Ticket prices are higher for Das.
Yeah, it's good for the,
Very
it's good for the
I love
business.
Das.
No, I think the quality content's good. I think that the natural evolution of crypto is that's going to mature as an asset class, and like this is the future of crypto, whether or not crypto natives like to hear it or not. And I think that this is probably the highest signal conference to noise ratio out of everything else out there in the industry. And yeah.
Anything you want to add?
Say that again.
Anything you want to add?
No, I think that's about right. I think that, you know, having now been to a few DASs, it's very much like teaching moment for our team. Whereas like in permissionless, like we're learning, but I would say that this is like the most educated crowd that we've had, which is pretty cool.
Yeah, I agree with that.
And I feel like we actually have the opportunity. It's educational for us because we're absorbing TradFi best practices and lessons learned and language. And I think we have the opportunity to educate them as well.
Yeah.
So I like to see Blockworks as like a brand that's like bridging TradFi and crypto. And I think like we're able to put our best stuff out there in moments like this.
Although I will say, I feel like at DAS New York, I felt a lot more like I was teaching people versus now I feel like everybody already knows, like everyone's caught up. And that like, I guess that learning curve that I would have expected to be much longer was not as long as I would have hoped for it to be.
Well, if you bring up Hyperliquid on every podcast, eventually everyone will hear it.
Everyone will figure it out eventually. That's good.
You even figured out a way to mention Hyperliquid on the Athena podcast.
Oh, yeah.
I was like,
well, no, but to be fair, HIP free and Hyperliquid and Ethena is very relevant.
It's gonna be a movie.
It's gonna be a movie. A lot of volatility on Friday. Tough weekend. Do either of you care? Were either of you liquidated? What are your thoughts?
I remain bullish. I think that it's a great time to own risk assets. I think that any volatility along the way should be welcomed. We don't get enough of it, and it makes entries really hard. I think Friday was useful in that one, it exposed a lot of the problems that we still have and still need to fix. And for investors, it was a short but much needed entry into a lot of things. And frankly, a lot of tokens that stayed where they are, they kind of deserve it.
Yeah.
So it's just like a nice,
harsh, but yes.
a nice repricing for some assets, and then a nice entry for things that were thrown out with the baby out with bathwater.
Yeah, I think a couple things. No, one, I was not levered long or short.
Because you like leverage. Like I asked, I knew he wasn't levered on, but I imagined you might have been.
Yeah, Boccaccio's, I guess, shedding light on my gambling problem live on live stream. But that was David of old, not anymore. It's a spot only meta from here on out. I think you're going to see a flight to quality, hopefully, because I do think that there's a lot of like undervalued assets, especially after the move that happened on Friday. The one thing I'm thinking about the most is how does Binance's market share change from here? Other exchanges did have some issues, but Binance clearly was like the driver of the dislocation of the market, and is because of like their own issues with their pricing oracle for some assets, and ultimately exchanges, just like banks, it's like a trust and brand thing, and a lot of people lost a lot of money on Friday, and maybe this is good for Hyperliquid. Maybe this is good for OK. You even saw like OKX and some of the other like major centralized exchange founders like kind of going after the 900-pound gorilla in the room, which that is Binance. So I'm really curious to see like how I guess market share changes from here, because obviously like the market structure we have now where most price discovery is happening on Binance, and they own, I don't know how much market share, something crazy, probably 80% of all market share. I have to imagine, is obviously not good for the industry.
That's fair. I think a few people I talked to today said similar things. Like one was that actually, like you said, Binance was the one that had issues, and I mean, on-chain was working well, DeFi held up well, lending held up surprisingly well if you think about it.
Yeah, when you hard code things to one, it's simple, right?
Don't guess. You should have gone smart 20 minutes ago. Not now, buddy. I would have liked some of that fire over there.
Hey, we're all friends here.
Very good. Very good.
I'm just kidding.
No, it held up quite well. Like everything held up quite well. I'm not gonna do the hard coded thing again, but what he's saying is correct in that we won't do this now.
No, hold on. Like we should, because I do think I'm not saying
If-
what Ave did was right or wrong, but what I think in the moment it was
We're gonna
the right
lose
thing.
Ryan.
No,
if
in
we
the
do
moment,
proof
really
of
quick.
reserve stock.
In the moment, it was the right thing, but I think a proof of reserves, a TWAP based like delayed Oracle, the industry is learning how to do proper risk management, proper Oracle procedures, and like this is just another learning lesson. Yes, it was a very expensive learning lesson, but a learning lesson nonetheless. If anything, this is going to make crypto more anti-fragile moving forward.
I agree with that.
Sorry, Ryan.
I'm here.
Very, very good. And one thing is like that I always kind of tune out is all the DApp talk. Like I'm not a big digital asset treasury guy, but it seems to be like very, very popular. Almost like yesterday, I imagine Felix talked about it for like half of the time of his live stream. Are you guys still very, very excited about digital asset treasury companies?
I think that there's a lot to talk about. I kind of ignored it. I mean, I definitely ignored it when it first started. It did seem silly, like you're just wrapping assets the other way. But I do think that it raises really interesting questions about, power in these systems, especially now that these DATs own a lot of tokens and have a lot of influence and are incentivized differently than, the institutions that were stewarding these ecosystems before.
He really wants me to ask about. What do you think?
No, that's what's interesting about them. Like the premiums were interesting because they were ridiculous, and now they're less ridiculous. And so, what are the interesting things to consider on a forward-looking basis? It's leadership of ecosystems.
Do you think Tom Lee will actually start demanding that certain things go different ways for Ethereum?
There's a non-zero chance.
I don't think it's
Yeah.
just like a Ethereum and their
No,
DATs.
it's also for like
it's all right.
Sol,
Yeah, it's a
Avalanche.
non-zero chance. Yeah, of course.
But is that like 30 or is that like 5? Like how involved can you get? That's
the average of 30 and 5. Yeah.
Very good. Okay.
So it's something. Yeah, it's a non-zero chance. Look, I mean, you have. You already saw it in the Solana ecosystem where we used to want to kill the inflation rate, and now we're like okay with the inflation rate because it adds income for DATs, and if a DAT has income, it's eligible to be included in an index. Whereas if it didn't have net income, it would not be eligible to be included in an index. And getting the DAT in an index would further the further things for the DAT and potentially for the ecosystem. So you're already seeing it. I mean, Tom Lee showed up, and ETH went from 1,800 to 4,700. Like the influence is already there.
It went 1,800.
You have to have your eyes closed to think otherwise.
No, for sure.
I don't want to say I didn't understand DATs. Similar to like when they first came out, I was probably on a 0x Research podcast, and I thought that I would never touch an asset that had a DAT behind it because I was worried about the key man risks tied to them. I was worried about potential like hidden leverage risks tied to them. But ultimately, what it is, it's just an actively managed fund that has a base denominator instead of USD, based in the native asset of that ecosystem. They're trying to get as much native asset per share. Fund is trying to get as much USD per under its AUM and try to generate alpha or generate returns for their LPs. So it's the exact same thing. I don't really know what's going to happen moving forward. I think it's pretty clear though that DATs are going to be moving on chain, which I'm really excited about. I think it's going to be really interesting how DATs that are these crypto equity companies, but they're going to have a material portion of their business live on chain. You're obviously seeing a lot of the Coinbases of the world, the Robinhoods of the world, a lot of other TradFi firms starting to move on chain. It's going to be really interesting, like in quarterly shareholder letters, what have you, like how they represent their on-chain business in a way that TradFi can understand and digest. Because right now it's a foreign language to them. But I'm really interested to see like how that verbiage and like how they structure, I guess, like their business forward looking.
I think that makes sense. I similarly, my main thing was I guess I didn't understand why it makes a lot of sense because a lot of these assets now have ETFs, right? So like if you are an institution, you can buy or get exposure for the ETF, or like I honestly don't think it's that difficult for some of them to just buy stuff for like Fireblocks, Copper, what are the other ones, Bitco, etc. Like these providers.
Who buy? You're talking about
For
their DATs
institutions
or
to buy, yeah. No, for them not to buy, like, why would you have to buy a DAT as opposed? I mean, we're talking about this like 3.5 months way too late though. Like, so I'm
right.
I would like to, yeah. It would be cool if something else was happening.
Yeah.
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 But
I mean, there's a few
such is
things
life.
happening, but you don't like them.
Let's
Example.
Yeah, what's
HIV
happening?
free yesterday.
Next.
Snoozeville.
No, that's been going. That we've known about that for some
Yeah, but
time
it
as
just
well.
went live. They
Gotcha.
launched equity perps. That's pretty cool.
That is cool.
Yeah. I was talking to guys that equity perps is the biggest unlock over the next 6 to 12 months. I mean, he's also they're probably also going to do equity perps on there, and so he's like,
Equity perps is a new product. Yeah. You know, we saw the explosion in popularity of zero-day options on Robinhood because that was a new product for retail, and perps have been wildly popular. And now that you could do it on NVIDIA, that's a new product. It's it is definitely very exciting.
Do you think we're seeing a prediction market top with like the recent call sheet and poly market raises?
I really don't think so. I think we're gonna get. I think, first of all, I think you can't just have two of them dominate. I think what we'll probably see is like, a lot more competitors come in, maybe smaller competitors.
That'll actually eat into material market share.
Well,
Because historically speaking, like there's always a Coke and a Pepsi, but there's usually never like there's a huge drop off between the third, like the Dr. Peppers, right?
See, the thing with crypto is that in crypto everybody wants to be early.
Or
right?
Hershey's and Reese's and Twix.
Yeah. I mean, Kit Kats are my Coca-Cola, but Twix are a little under the Pepsi brand.
No, but like in crypto, everybody wants to be early, right? Like nobody really needed AVAX or Luna, but they came in. Like it could have just been Ethereum and Solana, but it doesn't work that way. So people want to be early, and Founders Fund was already early to Polymarket like 6 rounds ago. You know, like people want to get exposure to these new primitives. So I imagine some will at least make a valiant effort. And let's not like pretend like Kalshi is or Polymarket is like at their final form. There's gonna be, I think there's gonna V2 is always better than V1, right? Like there's gonna be incumbents coming in that Kalshi and Polymarket probably still features from, but like those are still gonna capture maybe not 40%, maybe not 60%, but they'll capture 10%. I wouldn't like perps. Do you have any doubts?
So you're saying Hyperliquid's gonna lose significant market share soon?
I think there's a chance that they could lose significant money.
Yeah.
Like
I never thought I heard you have an objective opinion about Hyperliquid.
No, I always talk about. I was talking about this with Carolina today, on the pod, and I mentioned my bear case for Hyperliquid is it goes the Ethereum way. Like the team get lazy and they say we already have such a massive lead, and then some underdog like Lighter, or like in Ethereum's case with Solana just comes in and like just does everything at the same level, but just like much more focused, because they have something to lose, which is not winning.
To your point, going back to the prediction market thing, I think it's interesting. Kalshi partnered with Robinhood to like launch prediction markets on Robinhood's UI, and I'm pretty sure like 2 weeks ago or 3 weeks ago there was a rumor going around that Robinhood's now thinking of launching their own prediction market. I don't think it's part of Kalshi. I could be wrong, but I'm pretty sure I saw that. So like, there's credibility behind the fact that like these two leaders right now are market leaders today. It doesn't necessarily mean they're market leaders tomorrow. And if Robinhood comes in with the distribution that they have and decides to create their own product offering, and they now have the data to know, like, our users do like prediction markets or they don't like prediction markets, and how they like it. So now they can pretty much use Kalshi as a guinea pig and then come in and create their own prediction market that they own.
Kalshi versus Polymarket with Sportsbook. Kalshi is 70%. Without the Sportsbook, Polymarket is 85% of volume between the two. It's ridiculous how much, first of all, distribution, like Robinhood distribution. Second of all, betting on sports.
Is it all through Robinhood? UI? I have no idea.
I think Kalshi's. Yeah, I think it must be. Like it's on college sports, which I don't know anything about, but apparently it's very popular.
Yeah, they have a partnership with Robinhood distribution. Yeah, I mean, I think there's validity both ways. It's pretty early. The volumes are still very low. But I don't know. Polymarket deal with intercontinental exchange, and I think it's always a distribution game.
Yeah.
And it seems like they're really like they're putting, they're getting distribution in a few different ways now, and it's going to be really hard to compete with that. So it's like, how do you wedge into the market? You offer markets that they don't offer. I don't know who's doing that.
And Polymarket has an edge there, right? Because you can permissionless create pools, or is it the other one? Which one allows you to permissionless create pools?
I have no idea.
Very good.
I've never traded on
woefully
Polymarket or
underprepared.
Kalshi. I am a normie.
But I agree with you on that. Like listings is, I've always said
Listings velocity,
Listings
yeah.
velocity is all that matters. Like you want to be the first, and you want to have the most interesting markets.
You know who's very well positioned to do a prediction market is X. X is very well positioned.
I would like
a
it if they
prediction
fixed their
market.
application first and then focused on the prediction market.
They're like syncing drafts between devices. They're actually rolling that out soon. But no, they're like, I think that they're really well positioned for prediction market. I think a lot could be going on with X and crypto. I think maybe over the next 12 months you're going to see that. They've been a little slow, with literally nothing. But the cool thing is that Elon has for a long time had a financial super app vision. So I wouldn't count them out. I think prediction markets very naturally fit in that UI.
Yeah.
And with those creators, you have all the intellectual capital there, and everyone's arguing about what's going to happen next. Like, I should be able to reply to that tweet and go short that opinion. I want to do that so bad.
Dude,
And
I
I
would
want
love
everyone
to
to
short
see.
Ryan. Can you imagine Ryan's opinion?
It would settle a lot of debates, and then you retweet when you won it, and then it's a fun.
Well, the issue there is the oracles, right? Like, how the hell do you solve that? We can get
No
into the
oracle. You just some guy at X. He's like one guy in a room, and it's his job of clicking yes and no on who won, and he literally hands you paper money
Very
after the
good.
bet is
Very
settled.
good.
I do think
at the Saratoga racetrack.
I do think X is probably the dark horse on fintech. It's dark. It's like the dark horse for still becoming the largest social media platform. I mean, Elon's a madman, so you never know what he's thinking. But I agree. I think that I use all of us. We're all addicted to it pretty much. We use it day in and day out. I use it more than any other social media platform. The thing is, I don't know if that's normal though. My wife doesn't use X at all. I don't know if your guys' significant others use X, right?
It's only 500 million monthly actives, I think. So So what is Instagram is 3-4 billion.
I don't know.
Or sorry, Instagram's 2 billion. The total
I don't
house of
have either,
apps on
so-
Meta is 3-4 billion.
You don't have an X account?
No.
It's a lie. All right. In other news outside of Polymarket, what about Monad? They announced their airdrop.
Did you
their
check?
claim window? I didn't check, but I saw.
Did you get a card?
Yeah, I did.
Did you claim it?
Wait, were you wave 1 or wave 2?
I don't know.
It was
I don't
wave
know.
one.
I don't understand these games.
Just
I don't
take the
get
free
it.
money and
I
shut up.
don't get it.
Oh, don't worry about it.
Where do I click? Where do I click?
I didn't check yet, but did you check?
I did not check. As
Okay.
well. So it's free guys who
I
didn't
don't-
check talking about the check
I don't.
right now.
I mean, I heard you could sell it OTC. for
That
a
was a
lot.
lie.
That was a
That
lie.
was a lie.
That was a
Oh,
lie.
they were trying to steal my
Yeah, that-
NFT.
No, what I don't understand is I didn't read all the details. I literally looked at it for 2 seconds before I came onto this pod, but I'm pretty sure I saw that Monad's airdropping a portion of their supply to Moonbird holders and every other NFT holder under the sun that's a major NFT collection. And I don't understand that. I don't understand that. That irks me, and it's nothing against the Monad team.
It's pretty common.
Yeah, it is pretty
But I don't get it. I don't get it.
The thing is, if
They're
you're
not your users.
if you're an L1, you have to airdrop tokens somehow, right?
Sure.
And I guess I'm thinking of 2 recent examples. Plasma did, I would say, probably the most productive way, which is pre-deposit vault, move all that capital over there, and then you instantly have a capital base to say okay, look, you know what?
Trillions.
The alternative there is you launch the chain without a token, I guess, but that
That's
also
like
doesn't
hyperliquid
work.
airdropping to DYDX holders.
I don't think it makes a lot of sense.
Like it's not a good strategy. Those aren't your users. Those aren't even, they could be potential users. But let's be honest, the people that they airdropped to the Monad card holders, think of the amount of overlap between the Monad card holders and the Moonbird holders. You're telling me it's not nearly 1-to-1?
I would say it's probably not 1-to-1. I would say it's
pretty
maybe like
close.
The Venn diagram is like, I don't know how you do like a 40% thing, but I would do like 40%.
It's
logically makes sense.
It's a high customer acquisition cost.
Yeah.
And Six Man did a study on this like a year ago that just like everyone sells their airdrop. Everyone
Not
sells
me.
their
I always
airdrop.
hold it. I stake it.
Like I hope. I mean, look, for my own internal or my personal benefit, I hope they don't make me do anything. I hope I can just claim and get it, and I probably will sell it. But
Don't give it to him, Monad.
I'm hoping. No, I'm truly hoping. Monad,
Give
if
his
you're
to mine.
listening,
I won't sell it.
I really hope
He hasn't claimed it yet. There's still time.
But no, like I hope that you force people to, when they claim, they have to auto deposit into like a lending platform or something like that to like create a strong capital base for your ecosystem, and I can generate yield off of my holdings by like people borrowing against it. But like force me to become a user. You're forcing me to become a token holder. You're not forcing me to become a user, and it's a completely different thing.
Yeah. Pre-deposit vault, I think, is the way to go for a new
I agree.
L1.
I like it.
I will say that Monad, the one thing that they did that was really cool that no one else did was they cultivated a very like intense community way before the
Strong
token.
agree.
I thought that was really cool. That's like Harvard Business Review study worthy on how you make people excited about your product before you even have one.
I
agree.
I disagree.
Really?
Well, it's just all botted, no? Like, I have nothing against Monad. I always say this on every pod I say. Monad is really cool because they have designed this entire thing from scratch, right? Like, they're not taking it from XYZ.
I think people really like Monad.
Maybe we're on different parts of, like, we're always on different
Yeah.
parts of Twitter, right? Like, you're on the...
You're in the deep dark.
I don't think there's a single human PFP on your Twitter. Like
No,
no,
there
one's
are-
face is on
there
your
are
Twitter.
some-
It's just NFT PFP.
Yeah, it's nice.
Yeah.
You don't think it's nice?
I like to know kind of who I'm.
Yeah. How good has that been for you?
That's
All right. Before we end...
Wait.
It seemed personal.
What do you think? Do we know when Mega ETH's like
I don't know.
going live?
No idea.
I
I
don't know.
think
Q4's
probably
Q4's gonna be a
December.
movie though for my portfolio
Yeah.
between Monad and Fluffle.
Did you get
so
a
I'm hoping-
Fluffle?
I got a Fluffle.
Do you have a Fluffle? I was gonna say, what the fuck is a Fluffle?
Yeah.
No clue what that
I don't
is.
know.
Movie.
It's like a bunny, but NFT.
It's a cute bunny.
I don't know. I wouldn't say it's a cute bunny.
It's cute as long as I get a
Did
significant.
I have to go get it myself, or was it
You have to
gifted
pay
me?
for it. So David
Oh.
paid.
That's what I like, right? It's like I had to.
Yeah, that's I
Buy
think
in.
that makes a lot of sense. I don't think
Proof of capital.
Proof of capital, as in the team gets more money. Guys, before I end things off, last question: what are you most excited about over the next 6 to 12 months? I also wait. I have a second question that I also ask. If you guys want this one, rather, if you could long one chain, apart from Solana,
Apart from Hyperliquid,
apart from Solana, what would it be?
that's easy. It's base.
That's fair.
It has to be base. Like they have the best distribution in the industry. I mean, you can even argue BSC too, but I think okay. Or maybe they have the best brand. They have a strong brand between TradFi and crypto natives. I think it has to be base. But what am I excited about over the next, what you said, 6 to 12 months?
Yeah.
I'm really excited to see TradFi continue to tap into DeFi protocols. So I think the Coinbase Morpho integration is just like the tip of the iceberg. Obviously, Coinbase is also like routing their front end user flow to decentralized exchanges in the back end. We're finally starting to see the DeFi mullet actually come to life. You know, the DeFi mullet that we talked about in like the last cycle or two. I'm waiting for like a JP Morgan or like a Goldman Sachs. And I don't know how far we are from that world. Is it 6 to 12 months out? Probably not. You're really going to have these like fintechs that are already like tech forward. I think start to tap into DeFi liquidity, but I don't know. Like I think I'm really excited about that coming to fruition. And I'd like to one day be able to take a mortgage out on chain, and like have like one of these front ends like underwrite my credit risk, but we'll see.
That makes sense. I was going to say nothing. let's continue. Just such a high risk with the mortgage thing, no?
It's really not.
I don't know.
You're already starting to see under collateralized lending with like 3Jane. Wildcat does some under collateralized lending. Like that's all. It's literally that.
That's
right?
fair.
So it's already been done.
Ryan.
Well, I think that the thing I think that prediction markets are going to very obviously be a big deal given the distribution and the land grab that's going on right there and the cultural moment that they're having. But it's hard to get exposure to that. So I would just say generally, like, from the commentary that we get from both asset managers and that you see on the timeline, there's incredible amounts of bearishness around valuations and risk assets. And I would just say, like, I'm totally on the opposite side of that. I think if you just want to just like make easy money for the next 6 months, you just be long risk assets, like the warnings of a market that's overvalued are objectively false. It's like very selective metrics that you could do to paint equity markets as expensive, and rates are going to come in, and that's going to, markets are near all-time high. That's going to cause a flurry of economic activity. There's already a big wealth effect in risk asset. AI is ushering in a manufacturing renaissance in the United States, and risk assets are going to do fantastic.
Can I say something? I've
It's
never
pretty crazy
heard.
how I left the energy industry to go into crypto right before like data center build outs were a thing. I literally sold the bottom of my mechanical engineering degree.
That's all right.
No, it's not all right.
No, it's okay. It's okay.
Sold the bottom.
It'll be fine. I will say one thing. I've never heard.
It's the most valuable profession right now.
What, mechanical engineer?
Yeah, like I could have literally been building
Could
out
have been
data
a data center. And
Same
data
thing
center
happened to
engineer.
me, but
And now I'm over here talking to Boccaccio about
Fluffles.
To be fair, I've never heard Ryan Connor. I was gonna say two things.
He's never been bearish.
I've never heard him be bearish.
Perpetual. It's great. Like you're perpetually. I
Perpetually
like
bearish.
it. You bold me up.
But to be fair, he also joined at the bottom of the I've
did.
known him since the bottom of the Pico
He's-
Bear.
He's been
of
right
all
every time.
assets.
Every single time the market's had like a 10 to 20% decline, he's like buy.
Just buy.
And I'm like, no, like this might be it. And he's like, just buy.
The
And then
thing
it just
that's
rips.
different is AI.
Yeah,
it's like it makes all the bear posts irrelevant. All the bearish data points are relevant. They're not relevant. All that matters is that SaaS is a $300 billion market, and SaaS is coming for labor, and labor is a $15 trillion market, and that's all that matters. And crypto's great too.
Buy Bitcoin. Not financial advice. All right, guys, thank you so much for coming on. This was very, very good.
Thanks, Boccaccio, for having us.
Thank you.